files you already have at the FBI and in the Justice Department that could be released tomorrow. So look, Biden didn't release this stuff for some reason, and Trump doesn't want to release this stuff for some reason. My guess is there may be not much to it all, and that the only reason the president has actually bowed to this effort is by his own claim is because the publicity was bad for him. And so all he's done is kept the publicity going into this weekend. So we'll have a nice, thorough Sunday show, spectacular, with more Jeffrey Epstein, and who knows? Now everybody's got an investigative journalist looking for more Epstein material like the Wall Street Journal came up with. I mean, it is a classic summer scandal.
Indeed. And we are in mid-July. As we consider, though, Christina, the sentiment around this, obviously there are loud voices that have always been loud voices within the MAGA base who have made a very big deal about this, thinking of the likes of Laura Loomer. But there's another question of the broader Republican electorate. We've gotten a few polls this week, one from Quinnipiac that shows there is some division among Republicans on this issue. 40% say they approve of the way the administration is handling the Epstein files. 36% disapprove, 24% did not give an opinion. There were similar divisions in a Reuters Ipsos poll. 35% approve of the handling, 29% disapprove. Is the fracturing of the Republican, or more specifically the president's base, a real tangible thing here?
Well, it appears that this is the first time we've seen real fissures within the base. I mean, this is also a base that's been fed a consistent diet of conspiracy theories that the president has sort of promoted and then walked away from. We can start with the birther conspiracy theory, and then when Obama acquiesces and shows his birth certificate, where he is indeed American, the president says, well, that must be a hoax and it must be fake, right? The Pizzagate scandal with the Clintons and Hillary Clinton in the basement and pedophilia. He's also fed them a consistent diet of, Democrats are somehow attached to pedophiles. The difference is Jeffrey Epstein, this isn't a conspiracy theory. He was convicted for being inappropriate with minors. And so now that he has fed this base for many, many years, certain narratives, he wants to walk away, and they're not willing to walk away. And so I think what's been interesting about this particular story for a lot of journalists on both sides of the aisle is that we have not seen the base sort of disavow something that the president has said. They have moved and shifted and twisted themselves into pretzels on a dime as the president changes his whims. In this particular instance, we have a significant portion of his base who are saying, actually, I don't agree with you. I want to get to the bottom of this, whatever it is. And so it seems as though the president can't shake it. We know, obviously, the administration would like to shake it, considering they're releasing health information, which they never do, about the president as a distraction, and it hasn't distracted his base. And so we will see whether or not it's the courts, whether or not it's Congress, whether or not he can sort of keep pushing this off on Biden and Obama and the Democrats. But at some point in time, his base, a significant portion, wants some information, and he'll have to give them something.
Well, this really has become a top issue here in Washington, but also nationwide. In fact, over here in Bloomberg, we had New York City Mayor Eric Adams on the Odd Lots podcast earlier. We want to play you both a little bit of what he said about what he's looking for, what Attorney General Pam Bondi might soon be releasing or not.
I would love to see what's in those Epstein files. I think we all do. I'm eager to look at UFOs. There's so many history. I'm still trying to figure out who killed Kennedy. I look forward to seeing there's so many deep secrets in America that I think we all want to know. And it's imperative that as much as we can find out as possible.
Rick, perhaps, can you shed some of your insight here? Does this have anything to do with perhaps the sticking power that we're seeing this story really have a grip on members in both parties as they try to seek more answers? Does Eric Adams' argument there have some credibility?
Not really. I mean, I too would like to see the UFOs. Whenever I'm in New York, I feel like walking around the street, I see one UFO after another, but that's, more a comment on the residents of New York. The reality is that this was really sort of a Trump instigated problem, right? And sure, there's a lot here that is disturbing to people. Court cases were tried, people were convicted, Jeffrey Epstein killed himself. And the only people who continued to talk about this wasn't necessarily the Democratic Party. It was the Republicans who said, oh my God, they're keeping these files secret for a reason. There are all kinds of people. They implied Bill Clinton and others had exposure to this. And it was one of the classic MAGA kind of influenced messages. And we went through a lot of those over the last 10 years. And virtually every single one of them has sort of fallen on deaf ears. And this one has gotten some new traction because the president himself has indicated a willingness to show people something that they hadn't seen before on it. It wasn't really that big an issue until, Pam Bondi said, I'm going to release these records, and then didn't release anything that wasn't already in the public domain. So they are tripping over themselves on this issue. And the reality is, I think when you look at sort of good crisis management, you tell everybody, everyone be quiet. We're going to speak with one single voice. It will be someone who is not the president of the United States, and will draw attention to only that person and only the messages that they give, and tell everyone else to be quiet. I mean, we still don't know Dan Bongino's future as deputy of the FBI, which to me is the most important thing here, because he's supposed to be running the day-to-day operations of the FBI and has somehow been embroiled in this scandal to the point where he didn't show up for work for a couple of days. Now, that is unacceptable to most taxpayers.
Well, we're also maybe wondering about Bongino's future. We're also wondering about Eric Adams, who we just heard from's future, whether or not he can end up being reelected mayor of New York City. I would point out, Christina, that on Odd Lots with Joe Weisenthal and Tracy Alloway, they talked about a lot more than just Epstein. That full conversation can be found on Spotify, Apple, wherever you get your podcast. But they, no surprise, talked about the mayoral race, and specifically Adams had some choice criticism for Zohran Mamdani, who, of course, is the Democratic nominee, specifically his attitude when it comes to billionaires. You're up at Fordham. You know New York politics well, knowing Mamdani is set to meet with the House Democratic leader Hakeem Jeffries in New York today. What does he need to do to actually win this thing in the general, knowing it's not just Adams that he's up against, but Andrew Cuomo as well, with this weird independent factor we don't usually see?
Right. So first things first, Rick, as a native New Yorker, I would say that we are very welcoming to aliens and non-aliens, and tourists from other places. So we'll just put that out there. But Zohran Mamdani, going into the general election, we have to remember it's not ranked choice voting the way we saw in the Democratic primary. He's going up against not just current mayor Eric Adams, three-term governor Andrew Cuomo, the Republican nominee, and also another prominent lawyer, independent nominee Jim Walden. So there are 5 people currently in the race, to say nothing of all the small names that are always on a ballot. This 33-year-old state legislator, has to sort of capture the attention. I talk about this every week on my podcast, FAQ, which is the real estate community, the business community, the labor community, and the Hasidic community. Those are the 4 communities that can make or break a mayor's chances of getting across the finish line. And it is first past the post. It is not a 50% majority that is needed. It is whoever gets the most votes becomes the 111th mayor of New York City. And so Mamdani, who's relatively unknown to the business community, he's relatively unknown to the labor community, which is incredibly diverse. He's definitely unknown to the real estate community and also to the Hasidic community. And there are lots of conversations that he's had about Israel and domestic versus international policy that he's attempting to clarify and sort of provide more nuance. So this is, a summer where he's a fantastic campaigner, but we know that campaigning is not governance. And so part of what he's trying to do is to convince a large portion of New Yorkers that he actually can govern. We've had abysmal turnout over the past few elections where we are electing mayors with, barely 25%. I think we will see a high turnout election just because we have Republicans who may go with the Republican nominee, Curtis Sliwa, or they may be more inclined to go with someone like Eric Adams or even an Andrew Cuomo because they think that those individuals can negotiate with Donald Trump in a better fashion.
All right, Christina Greer and Rick Davis, our political panel on this Friday edition of Balance of Power, from the New York mayoral race to Epstein. Thank you so much for joining us. I'm Kaylee Lyons alongside Tyler Kendall, and we'll have more coming up here on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a down day for the Dow, the S&P. NASDAQ back in the green, barely up less than 0.1%. Little change, but nonetheless higher by 5 points right now. S&P 500 index lower, little change right now. Off session lows, but still down 2 points. S&P 500 index down under 0.1%. Dow Industrials down 190, a decline of 0.4%. Stocks have been fluctuating as traders parse a handful of earnings. Bond yields falling alongside the dollar as Fed Governor Christopher Waller here on Bloomberg Television and Radio reiterates his case for a July rate cut. Your 10-year currently yielding 4.41% with the 2-year 3.85% and the 30-year 4.99%. Spot gold up $12 the ounce, little changed, up by about 0.4%. And West Texas Intermediate crude oil down 0.3%, $67.36 per barrel of WTI. Crypto week and Bitcoin down 1.4% now at 117,821 on Bitcoin. Sarepta Therapeutics shares are now plunging by 38.2%. Sarepta says another patient has died from acute liver failure after receiving one of its gene therapies, putting additional pressure on the biotech after the recent deaths of 2 teenage boys. Again, Sarepta Therapeutics plunging now by 38%. Balance of Power continues now, and back we go to Washington. Once again, your hosts, Tyler Kendall and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Checking on the markets as we close out the trading week here on this Friday, a week, of course, that has been dominated by many of the headlines we've discussed so far here on Balance of Power, from what's happened legislatively in Congress to what's going on with the Jeffrey Epstein case and how that's engulfing the Trump administration, but also, of course, the ongoing saga of President Trump and his relationship to the chair of the Federal Reserve, Jerome Powell, and whether or not Chairman Powell is going to be safe in his job for much longer. Of course, the president suggests he does not intend at this time to fire Chairman Powell, but that is not stopping him from pressuring Powell to lower interest rates. Seems we see this every day now on Truth Social, including a post this morning. Too late, his nickname for Chairman Powell, and the Fed are choking out the housing market with their high rate, making it making it difficult for people, especially the young, to buy a house. He goes on to say, Tyler, that the U.S. is rocking. There is very low inflation, and we deserve to be, he says, at 1%. Of course, that is far below where the Fed funds rate currently is.
Right, and we actually had asked Joe Livornia, counselor to Secretary Bessent yesterday about this. Perhaps we'll have to see where they actually end up thinking that the Fed funds rate should shake out. But it is apparent that the administration feels bolstered by what has been positive economic data, retail sales yesterday, University of Michigan consumer sentiment today, all, of course, factors when we are talking about this pressure campaign from the White House. And actually, our colleagues earlier today on Bloomberg Television sat down with the Federal Reserve Governor Christopher Waller. You heard Charlie mention it earlier on surveillance. He is, of course, seen as a potential replacement for Jerome Powell, and he hinted himself that he would dissent if his colleagues end up holding rates steady in their July meeting. We want to bring you part of that conversation now, including starting out with some of his thoughts on the Trump administration's tariff policies.
Tariffs are a tax, and in public finance, you learn that you may levy a tax on a firm, but who bears the incidence or the burden of that tax can be a group of people or one person, not necessarily the firm. So this is what I've heard from a lot of firms. If there's a 10% tax, they'll force their suppliers to eat some of that cost. Workers may eat some of that cost in terms of less hiring and things like that. The firm will take it out of their profit margins. And then lastly, some of it will get passed on. And as I mentioned last night, I've heard this for months now. Like the rule is 10%, it's roughly, rule of thumb is a third, a third, a third. Suppliers will eat a third, firms will eat a third, consumers going to eat a third of that tariff. So if you eat a third of it and it's 10%, like I've been arguing, this is like 3/10 on the inflation rate for a few months, and that's it. And it'll persist if you do 12-month over 12-month. That base effect will not go away for a while, and then it'll just drop off a cliff. So that's why I've been arguing you want to look at like 3 months and 6 months to see if these tariff effects pop up and then go away. And so that's more critical than looking at 12-month.
Yes, but the way the president is putting these tariffs on might not match up with theory, Chris. The Smoot-Hawley tax was passed and came into effect on a certain date. The president is not yet put on most of these tariffs. They're in theory still coming, and we still haven't seen the Section 232 tariffs for the most part, the national defense tariffs that he wants to put on semiconductors and pharmaceuticals, et cetera. So if the process is stretched out, consumers could be hit by an ongoing series of tariff increases, and given what they've just been through, isn't there a danger that inflation psychology starts to seep in?
Well, that's exactly the point. All my examples, Ben, is if you put the 10% uniform tariff on and keep it roughly in that range, then what I've described is what will happen. If there's constantly a sequence of higher and higher and higher tariffs, then you are going to get this rolling potential impact on prices. That's true. If it's still just a question of delaying it, that doesn't change my argument. Whether you see the spike in July or it happens in August or September, when it happens is irrelevant for the economics. That's a non-starter of an argument. Firms could also just spread it out in smaller increments over several months. The total effect still ends up being the same. They just get there in a later fashion, and it'll be smaller amounts. So the bigger thing is if we just continually get another wave of tariffs, another wave of tariffs, another waves of tariffs, that's when things become more problematic, thinking about what's going to happen with inflation.
Fed Governor Christopher Waller, in conversation with our colleagues on Bloomberg Surveillance, including Bloomberg's very own Mike McKee earlier today, talking about tariffs and the unknown factor that it plays, an unknown policy that exists around them, which, of course, is one of the reasons that the Federal Reserve is maintaining, at least for now, that it feels comfortable where it is, keeping rates on hold until it has more clarity around that specific element and how it will influence the economy. But of course, President Trump does not want the Fed to be on hold, as we mentioned once again today, pushing the Fed to lower interest rates. He believes the Fed should be down at 1%. That would be substantial cuts from where we are now. And we want to get into this and other issues as we turn now to Natasha Surin. She's professor at the Yale Budget Lab, former Deputy Assistant Secretary for Economic Policy, and former counselor to the Treasury Secretary, Janet Yellen, at the Treasury Department. Natasha, welcome back to Bloomberg TV and radio. When we consider the president, who in that True Social post, as he pushed for a 1% Fed funds rate, talked about how that rate would save the U.S. $1 trillion a year in terms of the interest payments that we have to make. Is that really how it will work in reality? If that is the narrative he is pushing, the Fed cuts rates, it makes our financial situation fiscally as a nation much easier?
So the challenge that we kind of have to grapple with is that the Federal Reserve and the Federal Reserve's independence is really crucial to the role that it's able to play in the economy as a stabilizer. So when the Federal Reserve makes decisions, it has two things in mind. It has what does the employment picture look like and what does inflation look like? And it's reacting to those two particular, really substantive data questions. If you're in a universe where instead a Federal Reserve that's become politicized is reacting to what President Trump thinks that the interest rates should be, well, in that situation, you kind of break the relationship between what the Federal Reserve actually gets to set, which is the federal funds rate, the rate at which banks lend to one another, and things like mortgage rates or car loan rates or small business loan rates that are like actually relevant to consumers in this economy. So perversely, by sort of trying to push so aggressively for an interest rate that is way outside of the realm of what any economic observers think makes sense in an environment where employment is basically at 4-ish% and inflation is still not back to target and in fact ticking upward because of this tariff policy, you really don't have any case to make for those type of rate choices outside of just politicization of the Federal Reserve, which comes with real risks.
I'm also hoping, Natasha, that you can give us a little bit more context here, too, because we have to keep in mind that the Fed chair is only one vote on the Federal Open Market Committee. And we did speak to Bill Pulte, the head of the Federal Housing Finance Agency, who told us earlier this week on Balance Power that they are seeking for Powell to step down as chair, but also his position on the board. Can you just give us a little bit, could this complicate the administration's ultimate goal here when you do have other members who are voting? And what we are hearing from those other members when it does come to the future of rate cuts.
And, it's like really important for your viewers, I think, and listeners to understand, like, there is no sort of button that the Fed chair pushes to change the interest rate. The way that it works, as you're describing, is the Federal Reserve Chair is one of 12 members on the Federal Open Markets Committee that makes decisions. They meet 8 times a year. They make decisions on the trajectory of the interest rate. And importantly, these are decisions that are made by a group of people. And so the Fed chair, even if the president was effective at getting a Fed chair in who was going to push for his desired rate cuts that he's sort of trying to effectuate from the top in ways that break Federal Reserve independence, well, the rest of the board is going to be in a situation, and the rest of the committee is going to be in a situation where they're actually trying to push against exactly that impulse because they want to preserve the independence of the Federal Reserve, both because they are sort of institutionally very concerned about it, but also because only then can we be in a situation where we are actually trusted and credible as being reactive to inflation and being reactive to the employment picture. And what's important for your viewers, listeners also to understand is, like, we in some sense have run this experiment before. Like, President Nixon put a ton of pressure on the Federal Reserve to cut rates in ways that would be short-term politically expedient. They did, and as a result of that, you saw inflation tick up from 3% to 13% over the course of 2 years in ways that required a massive course correction and led to a significant downturn. So, like, I don't think anyone should be rooting for that in this country, and it certainly goes against what the Trump administration is hoping to see from an economic perspective.
Yeah, the historical context is important to keep in mind here, Natasha, and I appreciate you pointing that out. As you talk about the idea of trust and credibility for the Federal Reserve, I also wonder about the trust and credibility of the president as we consider his very frequently changing deadlines when it comes to tariff and trade policy, because this is what the Fed is having to contend with, why it makes their decision-making perhaps so hard. How do you at Budget Lab even try to game out the tariffs and the likely revenue we are going to be getting from them when the deadlines keep moving and the numbers keep changing? Is it even really possible to model?
I mean, we are doing our best. My colleagues and I at the Budget Lab are sort of tracing every single twist and turn with respect to tariff policy in this country. And, to our count, we've seen the effective tariff rate change like almost 60 times over the course of the last several months as a result of the president's different political policies that have been pursued in this trade war. The thing that I think is, like, really important to grapple with, and you heard actually Governor Waller say a version of this, you've heard Chair Powell say a version of this as well. The president's been, like, super specific. He would like to see interest rates lower. Sort of Chair Powell and the rest of the Fed have been pretty specific as well that in a world in which this sort of uncertainty associated with trade policy didn't exist, the Federal Reserve would have already cut. And so you're in a world where it is hard in some sense to even game out what exactly the tariffs are meant to be for. Are they tools for revenue raising? Are they sort of important in order to balance our strategic alignment with vis-a-vis an adversary like China? Are they really about bringing manufacturing back into the United States? And the result of that is no one, you, I, and certainly not the business community, has any sense where these tariffs are actually fundamentally going to land. And that creates a difficulty that we can disagree about what the right effective tariff rate should be in the economy, but certainly this sort of start-stop that makes it impossible really to plan with any sense of where policy is ultimately going to land makes it really challenging to think, as an estimator, certainly very challenging to think about what the likely revenue consequences are going to be. But certainly as a business trying to make investment decisions makes it incredibly complicated to think about that as well.
Natasha, just in our final minute, I want to build off of this because we did see Michigan consumer sentiment for July today come in above estimates. What are we learning when there is uncertainty, though, about the consumer's tolerance here, since confidence at one point was plunging amid tariff concerns, but today's data did show it at a 5-month high?
I think it's really hard to make too much out of any one particular data point. We also got data this week about inflation that showed that in certain particular industries, if you look at things like consumer electronics, or if you look at things like household furnishings, which is a category that includes furniture, industries or sub-industries where the tariffs are likely to have substantial bite, you're starting to see an uptick in prices. I don't want to make too much of any one particular data point other than to tell you that the result of our estimates at Yale Budget Lab, which are trying to stay current with respect to where the president says tariffs are going to be come August 1st, this next deadline, is that consumers are going to see a $2,800 on average decrease in their in their household income as a result of higher prices. And for the bottom of the distribution, that's on top of something that you all have been talking a great deal about, which is these important cuts to social programs like Medicaid that have been recently effectuated. So I think there's a lot here that's pretty important.
Natasha, we have to leave it there. Natasha Surin of Yale Budget Lab here with us on Balance of Power. Thank you for joining us. We'll be back for more at 5 p.m. right here on Bloomberg TV and radio.
is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenevec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And very good afternoon, everyone. Live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week Daily. I'm Tim Stanovic. That is Shonali Basak. She's a Bloomberg News global finance correspondent. She is in for Carol Master this afternoon. Shonali, it's good to have you here. Welcome.
Good to be next to you today.
You have been busy. You've been on air all day, whether it's real yield, whether it's open interest. The market reaction in terms of equities a little muted, but bond yields are lower. The dollar's lower. A lot of commentary around Chris Waller.
It's a totally interesting way to round out the week, isn't it? Because you had the S&P 500 hitting that $6,300 level, but it's been fluctuating around that. There's some softness. That weak reaction to Netflix's earnings is an interesting setup before we head into the Magnificent Seven next week. And yes, I agree with you. That bond yield in the shorter end of the curve being lower is especially interesting after not only the Waller comments, but a week of strong economic data.
This is all our focus over the next hour right here on Bloomberg Business Week Daily on everything regarding that Christopher Waller interview and the Fed. Michael McKee is going to be joining us in just a few minutes. Also, talking about what's happening with the White House and with the Federal Reserve, we're going to focus on the White House. Jordan Fabian of our Bloomberg News team down in Washington, D.C. is going to be with us in just a few minutes as well. Also, on the company side of things, the CFO of Huntington Bancshares is back with us on earnings and just days after announcing an acquisition that's going to bring it to the Texas market. All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Before I get to the markets, do want to begin with the developing story at JFK Airport affecting planes flying in and out of the airport. Right now, we have got what's described as an aircraft emergency. So departures from JFK are grounded because of that aircraft emergency. The FAA says the ground stop will be in effect until at least 2:30 with a medium 30 to 60% probability of an extension. So right now, again, a ground stop at JFK at least through 2:30. Keep it locked in to Bloomberg for the very latest on this developing story. U.S. equities, a lot of red on the screen right now as we wrap up the trading week. What a week it has been, but the S&P right now, little changed on this Friday. S&P down under 0.1%. We've got the Dow down 205, down 0.5%. NASDAQ Composite Index down 4, little change there, down less than 0.1%. Your 10-year 4.41% with the 2-year 3.85%. The 30-year 4.98%. West Texas Intermediate crude oil down 0.4%, 67.26 a barrel. Spot gold up 0.4%, 33.53 the ounce. And as we wrap up crypto week, Bitcoin now at 117,613, a drop there of just about 1.6%. So again, repeating the JFK headline, we got departures out of JFK grounded because of a so-called aircraft emergency. That ground stop in effect until at least 2:30, according to the FAA, with a medium 30 to 60% probability of extension. Stay with Bloomberg for the latest on this developing story. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. And again, we'll bring you any updates to the situation at JFK if we do hear anything. Well, as we mentioned, Federal Reserve Governor Christopher Waller hinted he would dissent if his colleagues vote to hold interest rates steady at their July meeting. He's made his case for a rate cut to support the labor market. Waller said he thinks Fed officials should take the step if, quote, you make it very clear you think at this moment in time it is important to do. He spoke in a wide-ranging interview on Bloomberg TV this morning and talked about inflation expectations, especially as President Trump threatens the tenure of Fed Chair Jay Powell.
After the tariffs came on, everybody was worried about de-anchoring expectations, particularly after some of these Michigan surveys came out. But when I always look at the market-based expectation, because people have money in the game. Firms are making decisions on what their chief economists are saying. And if those things are wrong, they're going to lose a lot of money. So I've always paid more attention. I haven't seen much in the way of market expectations being unanchored in any ways you want to measure them, any forward. Now, in the near term, of course, they might go up because you would see inflation in the short term. But in the longer term ones, I'm not seeing it. So either the market is just dismissing all of this as chatter and noise, or at some point, if something happens such that it becomes much more serious, then you might see a discrete jump. And then, that's going to be a problem for everybody.
One of the questions that we get all the time, Chris, from people on Wall Street is, or one of the posits they make is that all this criticism of the Fed is hurting Fed credibility, and that the next chairman's going to have a tough job because there are going to be expectations for the next chairman set by the White House rather than by the economy. Do you feel that inside the building?
No, to be absolutely honest, we just do our job every day. I go in, I just focus on my work on monetary policy, payments, and oversight of the reserve banks. That's what I do. I let this stuff go and then just try to focus on my job. And I think that's how all of us are proceeding with this. I mean, at the end of the day, the president winning, whoever they choose, you're going to have somebody that has credibility with the markets, or you will see, as Jonathan was just talking about, you're going to see inflation expectations spike. You will not get lower interest rates. You will get higher interest rates. This is well known. We've seen this everywhere around the world when this happens. And I know Scott Bessent knows this. So this is not something that is lost on anybody.
Well, there you have it. That was Federal Reserve Governor Christopher Waller earlier on a Bloomberg surveillance. Michael McKee was part of the team that did that interview. You heard his voice right there. He's international economics and policy correspondent for Bloomberg TV and radio. When he did that interview this morning, he was in Victor, Idaho. Now he's just a few miles on the other side of the border over in Jackson, Wyoming. Mike, I want to stick on the credibility with the markets. That's the part that Governor Waller ended on right there. Obviously, Jerome Powell has credibility with the markets. Based on the reporting that you've done, the folks that you've spoken to, do the front runners to replace Fed Chair Jay Powell also have credibility with the markets?
Well, Jay Powell has a lot of credibility with the markets, and we've seen that in market reaction to when Donald Trump has threatened to fire him. The markets have essentially tanked. Chris Waller has a lot of credibility with the markets, and a lot of people say he might be Trump's best choice, especially when you consider what Waller was saying about how the market would react if they thought the Fed had lost credibility. Interest rates at the long end, which are the ones that matter for economic progress, would probably go up because there would be concerns about whether the Fed is easing too much. So at this point, there is credibility. The question is going to be who gets chosen and how are they seen? Are they seen as someone who is going to do the president's bidding, or they're going to follow the tradition of the Fed and do what's best for the economy?
Speaking of doing what's best for the Fed, I want to point out the most recent note by Neil Dutta over at Renaissance Macro, who has been weighing in a lot on this process. And in defense of Christopher Waller, in the idea of whether he would be, okay, so this is what he says first. Waller is bending the knee to Trump, or that he's losing respect in the process. Neil Dutta is knocking down that thought. And he's saying, who isn't losing respect in this process? Importantly, what Waller says will be taken seriously by the people around the FOMC table, and many of those people are not in contention to lead the Fed and already agree with the premise of his argument. Okay, so what do you think about that, Mike? The idea that there are more people around the table who agree with this idea that perhaps the economy is not as strong as the White House might be claiming.
I think everybody at the Fed feels that way. We heard it from Mary Daly in our interview with her yesterday. She sees the economy weakening. Now, she's not signed on to the July rate cut, but she does think they're going to have to cut rates going forward this year because the labor market, as Chris Waller said, is getting a little bit weaker. And as far as bending the knee, there's no question that Kevin Hassett and perhaps Scott Bessent have done that in arguing in favor of the president's economic plans. A little bit less so with Kevin Warsh, although he's a longtime Trump confidant. Chris Waller hasn't been seen as a Trump person, and I think what he wanted to do in his speech last night and in his interview with us is make a solid economic case for why he would cut interest rates in July, which I think he did. Now, the question is, do you think if you don't cut rates, the economy gets a lot worse, a lot faster? That's the nut question that will come up on July 30th for the members of the Open Market Committee. But I think what Waller was doing was demonstrating that he is not bending the knee, that he's looking at the economics of it, even if it appears he's supporting Donald Trump's ideas. And of course, it's going to be a little tricky for Waller when it comes to July 30th, because the question will be, how committed is he? Would he actually dissent if the majority votes another way?
You know, he spent a lot of time in that interview, Mike, talking about the importance of having conversations around this stuff and trying to bring other folks who are part of the FOMC and at least voting members of the FOMC over to your side. Present the evidence, show the economic argument why you think rates should move one way or another if you do believe they should move. Given what you heard from the Fed governor, do you think that July's meeting is a live meeting?
I don't think so, for the reason that we have heard from most members, most voting members of the FOMC up to today, and the blackout starts after today. They can't talk until after the Fed meeting. And there's only two, Waller and Vice Chair Bowman, who have suggested a cut at the July meeting. It may be that others feel that way, and we might see something in the minutes about people feeling that they could go either way. But at this point, they've led the markets to believe there won't be a cut, and they don't like to shock the markets, and that's what would happen if they did cut rates. And it's unpredictable what happens in the markets when something like that happens. So I don't think that it's really a live meeting, but the minutes will be very interesting.
Beyond the meeting itself, beyond the minutes, behind the economic data, how do you gauge the impact the uncertainty around the next Fed chair is going to have on the bond market? We've talked about this a lot earlier this week, the idea that the term premium could be higher at the longer end of the yield curve, which is exactly what the Treasury Secretary doesn't want. So how do they resolve this uncertainty when the president keeps on weighing in criticizing Fed Chair Powell?
Well, you know, Chris Waller was essentially asked that question, and he said he thinks Scott Bessent knows all about this, and that he will recommend to the president that he not do anything that would upset the bond market. Certainly there are people he could appoint that would send the markets, send bond prices falling rapidly and yields rising, especially from the belly on out. So that is something that at least the people who are paying attention to the economy and who understand the bond market in the administration will have to keep in mind as they get close to a presidential nomination.
Michael McKee, international economist and policy correspondent for Bloomberg TV and radio, joining us from Jackson, Wyoming. Mike, safe travels as you make your way back to the East Coast. Thanks for taking the time this afternoon. I do want to update everybody on a headline that we are following. That ground stop at JFK has been canceled. That's according to the FAA. Just to update everybody, there was a ground stop. Departures were grounded due to an aircraft emergency. The ground stop probability of extension was 30 to 60%. We reported that earlier. The FAA reporting that JFK ground stop has been canceled. Let's go to Washington, D.C. now and bring in Jordan Fabian. He's Bloomberg News White House editor. He's at our Washington, D.C. bureau. Jordan, I want to start with one of the most read stories on the terminal. You wrote it. It's about President Trump authorizing the Justice Department to seek the release of grand jury testimony from the prosecution of Jeffrey Epstein. It comes after the Justice Department and FBI last week, though, said that Epstein did not keep a client list and that no more files related to the case would be made public. Is it fair to call this some sort of about face?
It's certainly an effort to appease his supporters who are angry with his handling of the Epstein case. But I will note that this move falls short of the level of disclosure that his supporters have demanded, including some members of Congress. They want witness testimony, they want client lists, they want FBI interview records, etc. And this would be a more limited slice of those records, referring to the grand jury testimony. On top of that, the Trump administration has to go to a federal court to ask them to unseal those records. Remember that grand jury testimony is usually kept secret, and so this is not maybe going to see the light of day for a while, if ever. And so maybe a way to appease them now, but it certainly falls short of everything his supporters have asked for.
You know, you talk about it, it's not just his supporters. I've seen clips of the vice president, for example, on podcasts calling for the release of the Epstein files ahead of the election. I'm wondering politically where this is going right now, who's getting behind the president and who in the MAGA universe is saying, wait a second, there is more here that we want to see.
You're seeing the Trump's inner circle in the White House and Congress rally around him, but there are significant cracks, including House Speaker Mike Johnson, who's called for more transparency here in a rare moment of dissonance with President Trump. There's also those outside conservative influencers and podcast hosts that helped propel Donald Trump to the presidency last year and were really excited by the prospect of him releasing files about Jeffrey Epstein, but also the MLK assassination, the JFK assassination, and those folks have really been discouraged by his handling of this matter. And so you're seeing this rift widen as Trump kind of holds out on mass disclosure here.
Now, the move that we're discussing now came after the Wall Street Journal published a report alleging that President Trump once sent a suggested birthday letter to Epstein, to which the president said the letter was fake. In a social media post, he had threatened to sue the paper, its parent company, and owner Rupert Murdoch. How is the Wall Street Journal report resonating in Washington, Jordan?
It certainly caught a lot of attention, and it clearly rattled the president, given his bellicose response to that report. And that's because it, again, drew attention to his past relationship with Jeffrey Epstein. We had this weird situation where you have the president and his supporters last year agitating for the release of the Epstein files, kind of spinning conspiracy theories that a lot of important people were part of his his inner circle and were perhaps participating in illegal activities. Where if the president is on tape and on camera, partying with Jeffrey Epstein at his estate in Mar-a-Lago in the 1990s. And so you had this weird situation, and that Wall Street Journal report kind of put that back in front of people's minds as he struggles through this controversy.
We should note, too, that the paper declined to comment on the president's litigation threat. Hey, I just wanted to, in the last minute or so that we have with you, Jordan, get an update from you on something that was reported yesterday. The president was diagnosed with chronic venous insufficiency after experiencing leg swelling, though physicians said he's in, quote, excellent health. This is coming from the White House on Thursday. How rare was it for the White House press secretary to sort of acknowledge something not great about the president's health, or is this an okay diagnosis? What can you tell us?
The top line is it is unusual for this White House to be that transparent about the president's health. At the same time, this condition, as they described it, is a fairly common condition. It affects 1 in 20 U.S. adults. It's especially common in those over the age of 70. And so, but at the same time, it was interesting because that highlighted, the president's age coming after a campaign where he hammered his predecessor, Joe Biden, over his age and fitness. And so, I think the White House was especially, cognizant that there were photos out there showing bruising on the president's hand, swelling in his ankles. And so at the same time, they're trying to put that story to rest, saying it's not a major health issue, but it does raise attention to the fact that the president is 79 years old, the oldest man ever to be inaugurated, and time's only ticking.
Jordan Fabian, appreciate you taking the time this afternoon, joining us from Washington, D.C. Bloomberg News White House editor Jordan Fabian there. Check out his reporting and the entire White House team's reporting at Bloomberg.com and on the Bloomberg terminal. Once again, repeating a headline that just recently crossed the Bloomberg terminal, the JFK Airport ground stop has been canceled according to the FAA. A previously issued ground stop at John F. Kennedy International Airport in Queens, New York has been canceled. That ground stop was due to an aircraft emergency. Coming up next on Bloomberg Business Week Daily, Huntington Bank shares lower, even though the company boosted its net interest income growth forecast for the year. We got the CFO next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Bond yields fell alongside the dollar as Fed Governor Christopher Waller reiterated his case for a July rate cut. His remarks coming in an interview with Bloomberg Television and Radio. Right now we have got the Dow, the S&P, NASDAQ all in the red. 5-point drop on the S&P. Little change. That perhaps the key takeaway, down 0.1%, retreating from a record now at 62.92. The Dow down 201, down 0.5%. NASDAQ flat on the day right now. Lower, little change, down just 6 points. Our Mag 7 index, though, ahead of earnings next week out of Tesla and Alphabet. The Mag 7 index up now by 0.6%. 10-year, 4.41%, with the 2-year, 3.86%. The 30-year, 4.98%. Gold up 0.4%, 33.51 the ounce, and West Texas Intermediate Crude Oil WTI down 0.3%, 67.34 for a barrel of WTI. Chevron won its arbitration battle with ExxonMobil, clearing the way for it to buy Hess Corp in a more than 20 months after that $53 billion deal was announced. Chevron shares lower now by 1.6%. That ground stop at JFK is over. We do have more details on just what happened. JFK lifted the temporary ground stop put in place because of a disabled aircraft on the runway. The FAA put out an advisory saying it was halting departures for a brief period of time because of an aircraft emergency. We're learning that Delta Airlines Flight 183 landed safely at JFK after what is being described as a hydraulic issue. So again, repeating that ground stop, JFK International is over. Recapping, stocks lower, S&P down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, nice sigh of relief there after that ground stop. Thanks for that update, Charlie Pellet. Well, Huntington Bank shares stock down about 1.8% as we speak. The company reported second quarter earnings this morning. It boosted its net interest income growth forecast for the full year. Earlier this week, though, the company also agreed to buy Veritex Holdings for $1.9 billion in stock that expands its presence in Dallas, Fort Worth, and Houston. Back with us is Zach Wasserman, Chief Financial Officer of Huntington Bancshares. It's the holding company of the consumer and business regional bank, Huntington National Bank. It's got locations in a handful of states, including Ohio, Minnesota, North and South Carolina, and more. Also with us, Bloomberg News senior editor Nina Trentman. She writes the Bloomberg CFO Briefing newsletter, which you should sign up for at bloomberg.com/CFO-briefing. Zach is in Columbus, Nina here in our Bloomberg studio. Zach, I want to start just with the deal for Veritex in Texas that will accelerate your operations in the state. What attracted you to this bank in particular and to the Texas market?
You know, we're extraordinarily pleased with the opportunity to partner with Veritex. And, you know, a couple things I would say. One is the Texas market in particular is incredibly attractive. As you probably know, it's one of the fastest growing states in the country. It's the 8th largest economy in the world if it was a standalone country. And just the dynamism and the amount of business activity there is incredibly attractive. It's one of the reasons why we launched our own business there more than a decade ago, and we doubled down with a local expansion in early 2024. But Veritex also is an incredible platform for us to partner with. They're a top 10 commercial bank in the state, and in particular focused on the two cities, as you noted before, the two MSA areas, Dallas-Fort Worth on one hand, and then Houston on the other hand, that we really are focused on. So we not only see a great opportunity to combine our activities, but to really build on that. Well, one of the things we've talked a lot about is that this is a springboard for us to grow organically, not only now in the short term, but really over the longer term in Texas. It'll make Texas our 3rd largest state, to give you a sense. So we already will have a very meaningful presence in that really great market.
Zach, can you talk to us a little bit about how that deal came together? We know, of course, many companies have been looking at deal making this year. Deal making is actually up compared to the prior year period, but still, of course, there are deals that are not going through because of tariffs and uncertainty. And how far did that impact your deal, and also how did it come together?
Yeah, well, you know, so we have wanted to expand and sort of continue to grow into Texas for some time, and we've been therefore evaluating a lot of opportunities to do that, both organically. You know, as you probably know, in North and South Carolina, we've just announced a pretty significant organic expansion, building 55 branches and really doubling down, building out our whole franchise there. And so we were looking at opportunities to do the same thing in Texas and obviously evaluating lots of different ways to do that when we really began to talk with Veritex. And it came together pretty quickly. The first time we met with them to discuss a partnership in any specificity was in mid-June, so just about a month ago. And it evolved quickly for us to see, wow, these are not only incredibly strategic opportunities, but the organizations themselves share a tremendous affinity in terms of culture and mission, which, as you probably know, that is the sort of secret sauce to make an acquisition in banking successful. The cultures need to be aligned. The teams need to work together. And we saw that there was not only the strategic opportunity, but the cultures fit, and then we were able to work together to find some of these growth opportunities that we could capture together. We said, wow, this is a partnership that we really should move forward with. And so on Monday, we were really pleased to be able to announce that.
Just turning to your earnings, talk to us a bit about the past quarter. We spoke to you at the end of the last quarter, and we're asking you, do you see any signs of a recession in your business? How is your business doing? What are you hearing from clients? Now that we're 3 months later, how does that look?
Yeah, I mean, Q2 results were just phenomenal, and they really built strength throughout the quarter. To give you a sense, loans sequentially grew just under 2%. That's 8% year over year. That was at the high end of our guidance range that we had given earlier in the quarter. Deposits grew 1%. Fees were up 7% year on year. Spread revenue 12%. Ultimately, we saw pre-tax earnings up 16% and earnings per share growing 25% year on year. So it really was a bang-up quarter. I will tell you, if you rewind the tape and you go back to April, I would have told you we had a lot of momentum. We felt pretty confident about how things would go, but there was clearly quite a bit of uncertainty in the market, and the capital markets were pretty volatile. Fast forward to June, and we saw strength build throughout the quarter. Loan and customer activity really firmed up, particularly in mid-May and into June. And now the third quarter is starting out with a bang. We just talked this morning with our analyst and investor community, and we shared that through the first couple of weeks here in July, it's pretty strong, actually. So all signs are pointing toward continued growth and certainly a very encouraging end of what was, to start with, a somewhat uncertain environment.
Zach, Shanali Bassik here. Thanks for joining us today. Even with a lot of promising information coming out of this earnings season for the biggest banks, for the regional banks, there seems to have been a pretty muted investor reception for firms even like yours that have boosted net interest income guidance. That should be a really good thing. What are investors telling you in terms of what else they want to see, why the muted reaction, even if things are looking pretty good?
It's hard to know what's on the mind of investors at any given time, as I'm sure you know well. Look, I think if you take a step back, the regional bank stocks have expanded a fair amount over the last month. So I think there's part of that sort of profit-taking activity going on now as results come through. There's also obviously worries around how will different banks fare under this fairly wide cone of uncertainty around where interest rates are going to go from here. Are rates going to stay flat? And could they even go higher, or could they go lower? I'll tell you, for Huntington's sake, we have positioned the business to be pretty neutral and to effectively have the same outcome if we have 0 rate cuts or if as many as 4 rate cuts from here. And so I think that's one of the questions on the mind of analysts. I think another one is, as loan growth in the banking industry generally starts to pick up, which, by the way, is an incredibly healthy sign. But as it happens across the industry broadly, what will that do to deposit cost competition and the benefits of interest rates coming down by around a percentage point relative to the peak of Fed funds, over the last number of quarters here. So I suspect those and many other things are on the mind of analysts. For our part, I'll tell you, we put our heads down and we run the business. And I think, for what we believe pretty strongly is if we can keep posting that, teens to higher earnings per share growth and revenue growth in the high single digits, that ultimately we'll see the stock prices continue to expand as they have been for the last several months.
Zach, you talked about interest rates, which of course is a nice segue to our next question. We've seen an increasingly intense debate this week and in recent weeks about the future of Mr. Powell as head of the Fed, with the Trump administration asking for rate cuts, wanting to remove him. We saw this big excitement earlier this week when the New York Times reported that Trump had written a letter and waved that in front of people in Congress. I'm just wondering, for you as a regional bank CFO, I know that your peers on Wall Street have expressed their support for an independent Fed earlier this week when they reported earnings. For you as a regional bank CFO, how does that look?
You know, what we want is a well-functioning monetary system. We want a predictable and stable environment. We want to understand that it's a fact-based and you know, based on the kind of fundamentals of the economy in terms of how the decision-making is happening. So far, that appears to be happening. I personally give the Fed a lot of credit. It was a very difficult environment they've been through, and they seem to have managed through over the last several years pretty well here. And you know, that'll be where our focus is. Fundamentally coming back, you know, we run the business every day. We take the interest rate as given, and we try to optimize around that, Nina.
We're speaking with Zach Wasserman, Chief Financial Officer of Huntington Bancshares. Zach, since you do operate in these geographies, including Texas, Ohio, Minnesota, North and South Carolina, and more, you've got a nice regional view on where there's strength and weakness. Are you seeing any particular geographical weakness emerge anywhere?
Really not. You know, I think pretty broad-based growth. One of the things we shared today in the earnings results is that, like we've seen for the last several quarters, the growth we're seeing is very balanced between what we're calling our core, all of the businesses we've been operating for a long time, but also our new initiatives. Excuse me. The launches we're doing into North and South Carolina, into Texas. Recently, we launched our business into South Florida, and a number of new commercial specialties, and we're seeing a nice balance across them. So, you know, kind of across our traditional Midwest footprint, we're seeing strong growth in Michigan. I was just up with our Michigan-based team earlier this week, and we're seeing 6% year-over-year loan growth in that market, to give you a sense. In Columbus and in our central Ohio region, where I'm based, we're seeing very strong economic conditions and a lot of expansion. And then, of course, in some of the new geographies that we're growing into, North and South Carolina, Texas, Florida, we're seeing a fair amount of expansion there also. So not really seeing any areas of weakness. And, you know, again, as I noted, kind of the trend we're seeing month by month here is firming up pretty well.
Zach, thanks for joining us. It's good to see you again. Happy third quarter. I can't believe we're already there. Hope you have a good summer and do come back soon and join us once again. Zach Wasserman, Chief Financial Officer of Huntington Bancshares. It's the holding company of the consumer and business regional bank, Huntington National Bank. Locations include Ohio, Minnesota, North Carolina, and more. Stock right now down about 2%. The company did report results a little earlier in the day. Also with us, Bloomberg News Senior Editor Nina Trentman. She does write the Bloomberg CFO Briefing newsletter. You should sign up for it at bloomberg.com/CFO Briefing. Taking a look at equity markets on this Friday afternoon, and we're actually turning red. The S&P 500 down about 0.1%. The Dow right now down 0.5 percentage point, while the NASDAQ is pretty much completely flat. Coming up next on Bloomberg Business Week Daily, a check of the health of the housing market here in the United States. We're talking everything, including, yes, rates. Katie Hubbard of Walton Global next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks fluctuating between small gains and small losses as declines in tech and growth shares offset gains elsewhere. S&P 500 index still on track for a weekly advance after consumer sentiment rose to a 5-month high. Little change, the key takeaway at this hour, with the S&P down under 0.1%, down 5 points. The Dow down 213, drop there of 0.5%. Nasdaq Composite Index now flat on the day. Interestingly, the Mag 7 Index higher by 0.6%. Next week, we will be hearing from both Alphabet and also from Tesla. 10-year, 4.42%. The 2-year, 3.87%. The 30-year, 4.99%. Gold up $13 the ounce, $33.52. That is an advance of 0.4%. West Texas Intermediate crude down 0.2, 67.42 a barrel. And Bitcoin down 1.5%, 117,650 on a Bitcoin. Sarepta Therapeutic shares are plunging by 37%. The FDA plans to ask Sarepta to pause shipments of its Elevidys treatment after 3 deaths were linked to the company's gene therapies. Again, Sarepta right now down 36.8%. I'm Charlie Pelleton. That is our Bloomberg Business Flash.
Appreciate the update, Charlie. Thank you. U.S. housing starts rebounded in June on the strength of multifamily building, while weakness in the larger single-family market pointed to some ongoing struggles with bloated inventories and affordability constraints. New residential construction increased 4.6% to an annualized rate of 1.32 million homes last month. It's picking up after an almost 10% slide in May. That's according to government figures that were released earlier today. Our next guest watches all aspects of the housing market. Great to have back with us Katie Hubbard, Executive Vice President of Capital Markets at Walton Global. It's the privately owned asset and real estate investment company. It's got over $4.5 billion of land assets under management and administration, and more than 80,000 acres under management and administration. Walton Global is in retail, industrial, commercial, and more. Katie joins us from Denver this afternoon. Katie, you were last on with us just about a month ago. Is the residential housing market now better, worse, or no different than it was then?
Hey, Tim, thanks so much for having me. I would say the housing market machine is definitely gummed up right now, and it is continuing to flatline, with the increased housing prices going up 60% from 2019 to 2024, and mortgage rates doubling over the same time. It's just affordability is keeping really everybody stuck.
What do you make of mortgage rates going forward? If you have a 10-year yield that has been pretty sticky, we have reached roughly 4.5% again this week, although we are below that level right now. What does it mean for the potential for mortgage rates to eventually go down? A lot of people think it will be the Fed that could help, but if longer-term rates stay sticky, then is there a chance that mortgage rates just don't follow on the path lower?
That is really the challenge. And so we obviously are hearing President Trump wanting to send rates down. However, the 30-year fixed rate mortgage sitting at rate 6.7 right now is tied to the 10-year Treasury more closely than the Fed funds rate, typically sitting 150 to 170 basis points spread. However, when the market perceives the risk for long-term debt to be greater, the spread increases. And so we really need the 10-year Treasury to come down. Right now, if you're looking at technical analysis, it is channelizing. So it is looking to make a move. Hopefully that move is going to be to the downside, bringing rates down. And really, that's going to be the biggest driver, I would say, for how we get the housing market unstuck. Even with the big, beautiful bill that was just passed, we saw home builder sentiment increase slightly because there are some tax incentives that are going to be helping out in housing, but it definitely isn't going to do as much as it would if we could bring the 30-year fix down.
What is your view on the Federal Reserve's role in this gumming up? And the reason I ask is because of a post that the president made to his Truth Social platform earlier today. Here's partly what it said. He said, too late, which is a nickname he uses for Fed Chair Jay Powell, and the Fed are choking out the housing market with their high rate, making it difficult for people, especially the young, to buy a house. He is truly one of my worst appointments. Is the Fed partly gumming up the market?
I mean, like I said, the Fed funds rate doesn't directly impact. It does, work in lockstep with the 30-year fixed rate. So I would say what the positive that we're seeing in housing is that at the state and local level, we are starting to see some reduced regulation to help with affordable housing, changing zoning laws. For example, Governor Newsom just changed the CEQA Act, which was enacted in 1970. So he's saying it's the biggest reform California is going to see in over 50 years, which is going to enable developers to have less red tape, making it easier to develop in urban areas that have less than 20 acres. So not having to go through all of the environmental red tape that they had to, and making it faster and cheaper, because historically in California it's really been a rich man's game to develop, and now people that have just written off development there are going to be taking another look. And so hopefully that and things like that at the state and local level are going to be able to help with the affordability, while President Trump's comments on the Fed, even if we do bring the Fed funds rate down 3% like he tweeted a few days ago, that means we're probably going to be in a recession at that time. So there's going to be bigger economic waves and impacts that come along with bringing the rate down.
Of the potential headwinds moving forward, and there could be many when it comes to construction and when it comes to just the creation and proliferation of new homes in this country, one question I have is actually around tariffs still, because you have those Section 232 tariffs still very much up in the air in a lot of ways, particularly with a lot of the housing inputs like lumber in particular. Meanwhile, there's still a big question mark around how some of the immigration policies could impact the labor market when it comes to housing construction. How do you weigh those factors when you're thinking about new home starts in the next year?
Yeah, Shonali, what's really interesting is that Walton's home builder clients, which we work with, mostly publicly traded home builders, they are reporting no increase in costs across the board. In fact, in some cases, they're reporting their costs have come down even since the talk of tariffs. So we're definitely looking out for labor because of deportation issues. So places like California, they might be reducing regulations, but they could have labor shortages. So we have not seen the impact of tariffs from our clients. They're not reporting that. And what's interesting is that publicly traded building supply companies are still operating at near 30% gross margins, while home builders peaked at about 27% gross margins in Q2 of 2022, and they've reduced their gross margins 600 basis points. The building supply companies are still operating at that high gross margin. So what we think is going to happen is that there's really going to be a balance and a dance between, yes, the home builders are really eating into their margins to drive home prices down. They're buying down mortgage rates, offering incentives to keep people buying their homes. But they're going to be going back to their suppliers and saying like, hey, now it's time for you to eat into some of your margins so that we can keep the homes as affordable as possible. So Lennar is actually offering 13.3% incentives across the board to their home buyers. And in places where they dominate, like San Diego, they have 50% market share. They're offering upwards of $100,000 discount on an $800,000 house. To just their strategy right now is pace over price.
So while that's good news to see a very muted impact on tariffs so far for the home builders, one big problem is that some of the tariffs that have been proposed are not enacted. Lumber in particular. Of course, they're not seeing yet the impact of the tariffs. We haven't seen the tariff yet. And so how are you starting to calculate what future tariff rates could look like on the impact of these home builders, given that there's still so much up in the air? Is there a potential for the industry to be shouting louder about this if they think it's going to create an impact, unless they don't think it is?
Well, for lumber specifically, our clients are using lumber futures. So the lumber that they're going to be building with in 6 months is what they're pricing in today. And then also, the president has really discussed how to open up federal lands for milling lumber in the United States and adjusting taxes to make it more incentivized to have lumber from the United States. And we do have the ability. I was just coming from Portland, Oregon today, and that's a hot topic for them as well. So we're hoping, and we don't really think that the lumber tariffs are going to impact the home building industry as much. In addition, our clients are really trying to use new technology and ways to really reduce lumber and use alternative materials to reduce the dependency on that as well.
Hey, Katie, thanks so much for joining us on Bloomberg Business Week. We got to run. Katie Hubbard, Executive Vice President of Capital Markets at Walton Global. It's the privately owned asset and real estate investment company. We are monitoring President Trump right now. He is speaking, well, he's participating in a signing ceremony for the Genius Act in the East Room of the White House. We'll bring you any comments as he does make them. Next on Business Week, Stocks on the Move.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. I'm Tim Stenivek. Sonali Basak is in for Carol Masser this afternoon. The president is participating in a signing ceremony for the Genius Act in the East Room. Sonali, we kind of knew this was happening, but that's not why you're here. But you are the co-anchor of Bloomberg Crypto with me every Tuesday at noon. This is a big deal for crypto investors. It's a big deal for crypto companies. It's also a big deal for financial regulation in the U.S.
It really is. And remember, the Genius Act is the one that pertains to stablecoins. And the idea that stablecoins can be bigger and bigger buyers of U.S. treasuries is one big reason that Wall Street has their eyes on this particular bill, although that they've made more progress too with other parts of the bill, like the Clarity Act as well.
Well, let's take you now to the East Room of the White House and listen in on President Trump.
I said, did you learn it as a child? No, I just learned it over the last 4 or 5 months. I said, you learn Japanese, maybe the single hardest language to learn. It's actually breathing rather than, it's breathing. I'm not going to imitate it because we'll end up with a big story and I don't want that. But he spoke totally fluent Japanese. I said, that's very impressive. And he was introducing me to Mr. Honda. I said, oh, are you in the car business? He goes, yes. I said, you're a very rich man. And then he said, Mr. Toyota, right? Toyota. And I said, what business are you in? Let me guess. He said, cars. He was my interpreter, and I was so impressed. And I was getting ready to leave. He said, sir, I'd like to run for the United States Senate. I said, where are you from? He said, Tennessee. I said, well, I love Tennessee, but do they know you there? No, but if you endorse me, I'll win, right? And I endorsed him, and he took a 48-point lead. And they didn't know who the hell he was. And he's turned out to be a great senator. And now they all know who you are. Yeah, so you're fantastic, and we thank you. And just the fact that you're doing this and you understand this is a complicated world, and you understand it, Bill. So you've been great. Thank you very much. We're also pleased to be joined by our great Vice President, J.D. Vance. J.D., thank you very much. Good job. And he's been up speaking late at night on the phone. I said, J.D., how about you taking 3 or 4 of these people, please? Because 3 or 4 I cannot speak to. I just can't. And he'd take them and he'd come through, right, J.D.? Also, Speaker Mike Johnson. He is unbelievable. He's an unbelievable. I mean, if you go by what we're doing, if you keep at this pace, you can't keep it up for another 200 days, but I will tell you this, if you keep up this pace for another week, you go down as the greatest speaker in the House in history. So one more week. One more week. Who needs Tip O'Neill? Who needs Tip O'Neill? He's better looking than Tip O'Neill, too. But no, he's been going at a fervent pace. Would you say that's right? Your wife probably says, you are crazy. You've been aging beautifully in front. He's an amazing speaker, a great leader, and everybody likes him and respects him, and that's why we're with a very small majority, like 3. We had a time when we were 1. Remember? We said we're 1 heart attack away from losing the House. Then we won a couple of seats and a couple of other. Now we have 7, maybe if we're lucky, 7. But we win with, nobody's ever done, I don't think anyone's ever done this before, to win with those small. We had a little help from Tom, too, right, and a lot of other people. I want to introduce also Secretary Howard Lutnick, who's been fantastic. You have done a great job, Howard. We've got trade deals coming out of our ears, right? We got so many trade deals. They're all calling so many, and I really mean this, too. It's like, how do you deal with so many? But, I always say when we send out the paper, that was a deal. They don't want the fake news doesn't want to hear that. When I send out the paper that you're paying 35 or 40% tariff, that's a deal. Then they'll call and see if they can make a little bit different kind of a deal, like opening up their country to trade. Never been open, but we're doing well, and we have a couple of big ones to announce pretty soon, right? Could almost do it today. Maybe we'll say it, maybe later on we'll do it. Senator Bernie Moreno, a great victory. Bernie had great victory. A great victory. That was one of the truly tough races. A lot of people weren't sure anybody could win that seat, and you won it in easy fashion, right? We won it together when you think of it, but you won it in easy fashion. You did a great job. A great guy. House Majority Whip. This is a great leader, Tom Emmer, a great politician and leader. Really good. And I like his wife even better. His wife is, she's the boss, but you are married to a fantastic woman, huh? And he knows that, and he likes hearing it, because some people don't, they say, sir, could you please stop saying that my wife is better than me, sir? Those are guys that don't usually end up with a good marriage, He's got a great marriage. So thank you, Tom. You really are a fantastic leader and representative. And Representatives Troy Downing, French Hill. Where's French Hill? Where is French? You have been so great. Thank you, French. I spoke to him a little late. He was walking down the hall. I said, French. He said, I'm there, sir. You are great, great guy. Everyone respects you, French. You know that. Bill Heisinger. Bill, thank you very much. Thank you very much. Good job. Dan Muser. I thought he was going to become the next governor of Pennsylvania, but he likes Congress better, I guess, huh? So, but I think you're terrific, and, I would have always been behind you. That I can tell you. Tim Moore. Tim. Thank you, Tim. John Rose. John. Hi, John. Thanks. Good job. Brian Style. Brian Style. Still young. Still nice and young. That's good. GT Thompson. GT. Thank you. Andy Barr, good friend of all of ours. Thank you, Andy. Monica De La Cruz. Monica, she's here someplace. Thank you, Monica. Thank you, Monica. Mike Haradopoulos. Mike, thank you, Mike. Look good. Mike Lawler, Mr. Salt. Well, it should guarantee your district. I mean, you worked hard for New York, right? And you're on television, I'm on television, so this should be good for a couple of points. But without you and your couple of friends from New York, that wouldn't have happened. That was not easy, right? Congratulations. Great job. Anna Paulina Luna. Anna, who is so great. I don't, even if she's here or not here, I want to tell you that she has been so great and worked so hard to make sure we got it approved. Ralph Norman. Ralph? Ralph? What happened to Ralph? Nick Begich. Nick, thank you, Nick. Good job. Good job. Good votes. I just saw a great poll on you, huh? Very good. Congratulations, Nick. Andy Ogles. Andy, who's a terrific friend. Beth Van Dyne. Beth, thank you, Beth. Great job. Thank you. Thank you very much for the great support. Roger Williams, a great baseball player, who also had to take a bullet, unfortunately, but he is a great guy. He was involved in that whole catastrophe, but he's fantastic and has been from day one, along with a lot of other people that I won't call out because I have no idea where the hell you are. I think I saw Jason here somewhere. Where's Jason? Oh, it's lucky I called him. Ooh, it's lucky. They didn't put your name because I invited you at the last moment, right? He was over there doing some business in the White House. But you've been incredible in your position. Nobody knows more about taxes and finance than you do, so we appreciate it, right? Is that true, Howard? It's true. Thanks, Jason. Great job. And you'll help out with that other matter. You make him so strong and powerful, right? Along with Deputy Secretary of Treasury, Michael Faulkender. Where's Michael? Good, Michael. How are you? Good. You'll help out over there, okay? And Ambassador Ken Howry. Ambassador? Thank you, Ken. Great job, Ken. I also want to recognize some of the countless industry leaders here today, including Brian Armstrong of Coinbase. You've done a good job, Brian. That's a big deal. Dave Ripley of Kraken. Thank you, Dave. Jeremy Allaire of Circle. This is a big day. Good job. Good job, Jeremy. Paolo Ardino of Tether. Paolo, thank you, Paolo. Ryan McInerney of Visa. That's a good company. Thank you. Chris Pavlovsky of Rumble. Chris, what happened to your location, Chris? You're always a front row guy. You're just being nice today, I think. How's Rumble doing? Good? Good. If Rumble's doing good, that means Truth is doing good. Truth. That's great. You're doing a great job. Thank you, Chris, very much. Vlad Tenev of Robinhood. Vlad, thank you, Vlad. Thank you, Vlad. Good. Tyler and Cameron Winklevoss. These are two smart, handsome guys. They got the whole package. They're of Gemini, but they have the whole pack. They have a lot of things, actually, but Gemini's just the one for today, right? They've got the whole, they've got the look, they've got the genius, got plenty of cash, and it's great that you're on our side. You guys are great. I can never tell them apart, but their mother can. I asked, can your mother tell you apart? And the answer is yes, right? Easily, or is it tough for her? Easy, I figure. Good. You guys have been great. Thank you very much. It's great to be with you. Let me say the entire crypto community, for years, you were mocked and dismissed and counted out. You were counted out as little as a year and a half ago. But this signing is a massive validation. And even before this signing, over the last year and a half. I think your stuff has gone up more than any stock, or just about more. A couple of stocks that were pretty good, I will say, but you have certainly as an industry gone up more than anybody. Nobody's gained the respect in such a short period of time. But this signing is a massive validation of your hard work and your pioneering spirit and your ability to never give up, because a lot of people would have given up 2-3 years ago. So I want to thank you for contributing to the incredible strength of America. This is going to make it stronger, and congratulations on this incredible achievement. You've made our dollar look really good and strong and powerful. It's good for the dollar and it's good for the country. And that's why I backed you at an early stage. And I also did it for the votes, because you did come out and vote, I will tell you. And they changed tune, you know, Biden's team, they changed tune right in the middle of the campaign. All of a sudden, they loved you guys. They dropped all charges. They did have, I got you guys out of so much trouble. And you know what? I don't think anybody voted for them, right? Because you remember, they treated you very unfairly, actually. So it's a great honor that we were involved. And it was a tremendous amount of support that we got at the polls. We won, think of it, we won every swing state. We won by millions of votes. We won the popular vote. We won the districts by 2,750. Think of that, to 505. Different districts too, by the way. Every once in a while that number can change, but it doesn't change by much. The map was almost totally red, and you guys were with us right from the beginning. Exactly 1 year ago this month, many of you were with me in Nashville, Tennessee. Do you remember that day, right? That was a big day, Nashville, Tennessee, when I became the first presidential candidate ever to address the Bitcoin conference. And at this time, and at that time, crypto builders and founders were under relentless assault by the Biden administration, which was trying to crush your industry and crush you as people and go after your families. And they were a vicious group of people. You know, people don't realize it. They were vicious, incompetent, but vicious. Well, Joe was an incompetent guy, but he was always known as a vicious guy. I guess if you're going to be in that, you're probably off. If they're incompetent is better, right? Because you don't want to have a vicious guy that's competent. If you did, I wouldn't be standing here today, right? But I pledged that we would bring back American liberty and leadership and make the United States the crypto capital of the world, and that's what we've done. And under the Trump administration, this is only going further. You're going to do really well. I mean, I'm so proud of what you've done in the last couple of years. And very important, on day one, I remember I did this and I said this and I mentioned this name, and I got the greatest applause of the whole campaign. We fired Joe Biden's SEC chair, Gary Gensler. We fired him. But I remember I was making a speech, and it was just a line in a speech. And I said, and I will fire Gary Gensler. The place exploded. I said, I finished like one, and I said, what the hell did that guy do?
You're listening to President Trump. He's about to sign the Genius Act. He's in the East Room of the White House, along with many executives from the crypto industry.
Appointed a visionary chairman who wants America to build the future and not block the future. He's going to be unbelievable. He'll go down as one of the greats. And Paul Atkins, where are you, Paul Atkins? And you know, Paul, the crypto guys, they said, everybody said, not only crypto, every industry, they all wanted Paul for the position. And he's a tough cookie, too. But they actually said, we don't care. We just think he's fair. All they wanted was fairness. And they have somebody that you're really a champion of the street and you're a champion of the country. You're going to do a fantastic job. I saw you interviewed the other night. I watched it about 2 o'clock in the morning. There was a little thing called C-SPAN, which I don't know how many people were watching. Don't worry, you were on primetime too, but they happen to have a little rerun. I don't want to embarrass you, but fantastic job, really. You are absolutely so perfect for the job. Congratulations, Paul. And Paul is here today among the commissioners, various commissioners, including Hester Pierce and Mark Yoida. Hester, and Mark Yoita. Thank you, Hester. Thank you very much, and thank you, Mark, wherever you may be. Is Mark here? Oh, stand up, Mark. I didn't. Good. Thank you. Good job. Good. I'm glad I gave you a second crack you didn't hear because of the thunderous applause for Hester. But thank you. I heard tremendous things about both of you. Thank you very much. My first week in office, I also established the first ever presidential working group on digital assets, and we have an executive director, Bo Hines. Bo Hines. Hi, Bo. And Bo is a great football player, right? Bo is a great football player, one of the better players in college football, so I know you from that also. See, who would think that I know that? I know a lot of things, Bo, but he was a champion player. I stopped the weaponization of government against crypto and Bitcoin, and we ended the lawless Operation Choke Point 2.0. That was a bad operation. And I kept my promises to the community and granted a full presidential pardon to Ross Ulbricht. Ross Ulbricht. And you have no idea how important that name became. It was like a symbol, and his mother was unbelievable. His mother was an unbelievable woman, but it was so important to a certain group of people. And in the truly momentous act last March, I signed an executive order establishing the U.S. Strategic Bitcoin Reserve, as well as the United States Digital Asset Stockpile, and that's all signed up. And with today's signing, we're pushing even further into the exciting new frontier. Just as I promised last year, the Genius Act creates a clear and simple regulatory framework to establish and unleash the immense promise of dollar-backed stable coins. This could be perhaps the greatest revolution in financial technology since the birth of the internet itself. A lot of people are saying that. I don't know. What do you guys think? Yes? If you say yes, I'm saying yes. I think it's great that you're involved, I will tell you. Many Americans are unaware that behind the scenes, the technical backbone of the financial system is decades out of date, many, many years out of date. You know that. Paul and others are straightening it out, but payments and money transfers are costly and take days or even weeks to clear. Under this bill, the entire ancient system will be eligible for a 21st century upgrade using the state-of-the-art crypto technology. Who would have thought we would have been saying that 2 years after I really met you for the first time? The Genius Act provides banks, businesses, and financial institutions a framework for issuing crypto assets backed one-for-one with real U.S. dollars, treasury bills, and other cash equivalents. It's really strengthening the dollar and giving the dollar great prominence. And, you know, you have this little group called BRICS. It's fading out fast. But BRICS is, they wanted to try and take over the dollar, the dominance of the dollar, and the standard of the dollar. And I said, anybody that's in the BRICS consortium of nations, we're going to tariff you 10%. And they had a meeting the following day, and almost nobody showed up. They said, leave me alone. We didn't want to, they didn't want to be tariffed, did they, Howard? So it's amazing. No, we're not going to let the dollar slide. If we have a smart president, you're never going to let the dollar slide. If you have a dummy, that could happen. Like the last one, he would, if you ever asked him about the dollar sliding, he would have no idea. But we can't let that ever happen again. Consumers, vendors, and people all over the world will then be able to use those stable coins for ultra-low-cost transactions that are cleared and settled in a matter of seconds rather than weeks and months. And it's really an amazing thing. And with the privacy, flexibility, and decentralization of cash, this revolution has the potential to supercharge American economic growth and empower billions of people to save and transfer in U.S. dollars. It's really all backed by the dollars. It's really a great thing. And a lot of, you know, we had a lot of Democrat support. I have to tell you that. I was shocked anytime you get one but we had a tremendous amount of Democrat support, which we appreciate, and which just shows you that you're doing the right thing. This will increase demand for U.S. Treasuries, lower interest rates, and secure the dollar's status as the world's reserve currency for generations to come. The reserve currency is so important. You know, if we lost that, that would be like losing a world war. We can never let anyone play games with us, and that's why when I heard about this group from BRICS, 6 countries basically, I hit them very, very hard. And if they ever really form in a meaningful way, it will end very quickly. I will tell you, for them, they won't be gone very long. I don't think they'll even do it. They're virtually afraid to meet. I also remain fully committed to my pledge never to allow the creation of a central bank digital currency in America. It won't happen. My first. Thank you. And the other night, I will say, with some of the congressmen and women, they wanted that so badly. That was so important to them. I was impressed that they knew what the hell it was, to be honest with you. Please, sir, please, the central bank digital currency, well, you have to make sure, sir. And I'm saying, what do you know about that? It's amazing the knowledge that people have gained all of a sudden. We had a lot of problems with some of them. I said, we've already got it from the Fed, right, from Commerce, and from an executive order. You don't need it a fourth time. Sir, we have to get it. It's amazing. But they knew their subject, though, didn't they, huh? And we helped them out. My first week in office, I signed an executive order to ban the creation of a CBDC in the United States, and very soon I look forward to signing legislation that will codify and ban make it a permanent law, put it in permanence. I'm also committed to signing landmark crypto market structure legislation this year to grow the industry. We're going to be growing it even more than people ever thought. It's a really hot industry. And for a little while, 2 nights ago, we were a little concerned because we were a little short on votes. I would say maybe we were about 9 short. 9 short at 3 in the morning. We were about 4 short at 3:30 in the morning. And we were in good shape at 4 o'clock in the morning, right? But the people, and few people, have fought harder for the bill than we're signing than some of the people here today. You have been unbelievable. It's our White House AI and crypto czar, David Sachs, who has done such a great job. And he has a show now. He's become a showman, but a couple of years ago, right? It's probably 2 years ago now in San Francisco, and I did his show. And I heard he's a very smart guy, and we had a great show. You kept it going a lot longer, and is that still your highest rated ever show? Oh, he knows what to say. He knows what. He had a rating that he had millions and millions of people. He said, what's going on? But we had a great show. And I said, that guy's really smart. I said, if I get elected, I was running at that time, if I get elected, we're going to bring him into government in some ways. He's worth a fortune. He's made a lot of money. He's a very rich billionaire. But this is more important, isn't it? This is me too. It's like, doesn't matter. This is much. I know Howard and I talk about it all the time. Howard could go back to his wonderful brokerage firm, hire 1 or 2 people, and it's not the same as what you're doing, right? We're doing the biggest deals in the world. Actually, the deal we're doing now in tariffs is the biggest, when you add it up, the biggest deal ever made in history. It could be 1,000 IBMs. I mean, if you think of it, it's the biggest deal ever done. So it's hard to go back to a brokerage firm and, make $79,000 commission on the sale of a stock, right? It's true. But I want to ask David. So David's been fantastic. He's done an incredible job. And I'd like to ask David to come up, say a few words. Thank you very much.
Thank you so much. All right, thank you, President Trump. It's a great honor to be here, and it's true that I never expected to work in government at all.
You're listening to David Sachs. He's AI and crypto czar, making comments in the East Room of the White House as the president is participating in a signing ceremony for what's known as the Genius Act.
Who really wants to get things done for the American people. And if anything, that's been an understatement. The first 6 months of this administration have been more successful than any administration in American history. What's been done? It's just been incredible. President Trump has worked at tech speed. We're used to working fast in Silicon Valley, but even this is fast for us in Silicon Valley, the speed at which you move President Trump. It's really incredible. And now today, you have another historic legislative achievement that is a monumental step to fulfilling your promise to making the United States the crypto capital of the world. This Genius Act will unlock American dominance in the crypto industry by creating clear rules of the road. It will update archaic payment rails with a revolutionary new payment system, and it will extend U.S. dollar dominance, like you said, globally, by creating a digital dollar that people all over the world can use. And for every digital dollar in a crypto wallet, there'll be a traditional dollar in a U.S. bank account, which will create trillions of dollars of demand for U.S. treasuries. So that is the power of this bill, is U.S. dollar dominance. This is a huge promise made and promise kept by President Trump. And there's just a few other people I'd like to thank. First, my family for being here. Thank you. And Bo Hines, who President Trump mentions, the director of our crypto council, he really did the heavy lifting here. So Bo, I just want to thank you again. And my chief of staff, Tracy Johnson, as well, who also does the heavy lifting. And Bill Haggerty and French Hill and all the congressmen and senators who have already been mentioned by President Trump, so I'll save the time, but it's really been an honor to work with all of you. This was really a team effort, but most of all, I want to thank President Trump for accomplishing what nobody thought was possible, and it's true that just earlier this week, the media was reporting that this bill was dead. This bill was dead, and then the media didn't know one thing, that we had a secret weapon. We have a deal maker in chief. And thanks to President Trump, he stepped in and saved this bill. And it's because of your vision, your leadership, your determination, your skill that we're all here today. So thank you very much, President Trump. Thank you.
Is that Laura? Please come. Just come here. This is our superstar. She was the head of the Republican Party, and nobody complained about anything. We went on to great. This is Laura Trump, married to a young gentleman named Eric. They have beautiful 2 children, but she has been so good. She stepped into that position like it was nothing that we won, and she said, "Dad, I'd like to go home right now to my beautiful husband."
The president making comments in a signing ceremony for the Genius Act in the East Room of the White House. President Trump said that stablecoins will be a revolution in fintech, that money transfers are costly and take a lot of time. Yet he's not going to let the dollar slide. He said losing the dollar as a reserve would be like losing a war. He also said that the central bank digital currency will never happen in the U.S. And he said he'll sign legislation soon to cement an order banning a central bank digital currency. The president also made a comment that he's committed to signing crypto market legislation this year. We also heard from crypto czar David Sachs at the White House. He's also the AI czar. He said the Genius Act will create demand for U.S. treasuries. I want to bring in Frank Spicer right now. He's CEO of Metafied. He joins us from Myrtle Beach, South Carolina. Metafied is a blockchain ratings company. Frank joins us once again from Myrtle Beach. Frank, good to have you with us this afternoon. Before we get to your comments on the Genius Act and everything you guys are doing at Metafied, and perhaps differently now as a result of what's happening in Washington, just tell everybody what Metafied does, because it's, I think, not clear to people who aren't in the space.
Well, thanks to this kind of legislation, now we can be transparent and fully open and say Metafied gamifies a global competition amongst humans and AI to make a sport out of predicting asset price movements. And we do that through our own token. And now that President Trump and the administration have come forward with this legislation, we can get to work, just like a lot of founders that have been waiting to hear this.
What weren't you able to do before this?
So we were able to understand the movement of asset prices and run AI models against the trends and trades that are going on in the market. But now what we're able to do is link it up with what's going on in the real financial markets and add value to allowing people to be accurate and early in predicting these asset price movements.
How do you see the recent U.S. stablecoin legislation shaping the market? Could possibly tighter oversight drive stablecoin issuers offshore?
I actually don't think so. I think this is a great thing for the market, because the requirement of the Clarity Act and now the regulation framework from the Genius Act is that stable tokens now have to be backed 1-to-1. So what I think you're going to see is stable tokens that adopt the U.S. regulations will be the ones that are trusted, and people will see them as a viable on-ramp to link the digital asset world with the traditional finance system.
What is your view on CBDCs? We have President Trump earlier, just minutes ago, saying that he will cement an order banning CBDCs. This seems to be always kind of hand in hand with stablecoins when it comes to conversations or discourse in this space.
Yeah, so what I think the administration is making clear on that is that you're going to have the innovation in the hands of builders and entrepreneurs. And what they're not going to do is turn the currency itself into a surveillance mechanism, which if a CBDC were to become available in some other countries and were adopted, I think people would be a little hesitant to get involved with it, because all that's doing is letting people track your move and turn you off from the financial system whenever you run afoul of saying something somebody doesn't like or take an unfavorable position. What this does is decentralizes the authority a little bit into the hands of builders and investors.
If you're watching on YouTube or Bloomberg Originals right now, you can see the president is about to sign S1582, the Genius Act. He's in the East Room of the White House. He's surrounded by people within the crypto industry, lawmakers who've been supporters of the crypto industry. You heard him call out a few of the people who were there: Brian Armstrong of Coinbase, the Winklevoss twins of Gemini, in addition to Vlad Tenev of Robinhood, David Sachs, the crypto and AI czar, there as well. I want to get back to Frank Spicer, CEO of Metafied. Frank, what legislation would you like to see when it comes to regulating crypto that is not yet law?
Well, right now there's clarity in the Genius Act as to what is a commodity, which is Bitcoin and Ethereum tokens, and the pathway to define yourself as a security. But I'd like to see some more clarity and some more help in determining what's a utility, because a lot of founders are building things with utility that link the two systems together, that carry value, but have a clear utility to them and are not such the case that they're a security. So it would be really great to see that. But I actually anticipate that we'll be able to work with the government to evolve that. And they seem really open to being able to have a conversation now, where before it was a little less clear on how to make that happen.
It's a big day for the crypto crowd today because the entire market cap of this space just hit $4 trillion, which is a big deal. So in light of
It's like the size of NVIDIA, right?
Yes, exactly. And really, the story got a lot of views. I see it on Twitter. Everyone's really celebrating. Do you think that macro factors like Fed policy, inflation, or rate cuts still affect the risk appetite? Or because of the maturation of this space, do you think they're kind of isolated and, they have their own factors going on?
I think what we all just witnessed was the mainstreaming of crypto. So given what's happened in the markets recently, I think the stable tokens allow an on-ramp to connect people in their everyday lives to be able to use digital assets. They're going to find their way into assets like Bitcoin and other projects that are worth investing in. And I think what you're going to see is you'll start to see the continuation of the Bitcoin asset especially become unhinged from inflationary policy, or in some cases run counter to the markets, because the original intent of Bitcoin was to hedge against central bank inflation. And now with a way to on-ramp dollars into the asset in a digital format, like stable tokens like USDC trading into Bitcoin, you're going to see people understanding, well, when they're printing more money, maybe I'm going to move into an asset that hedges inflation like Bitcoin does, because there's a fixed supply and they're never going to make more than 21 million Bitcoin.
But how do you view Bitcoin? Because sometimes it behaves like a risk asset and moves in step with the NASDAQ, but sometimes it's a haven asset and behaves more like gold, and then Bitcoin lives up to its digital gold status. I feel like critics will say that it's still in the melding phase of discovering its role in a portfolio. What is your take on that?
Well, I think you're right in your observation there. Bitcoin has gone through several phases. So the first was it behaved like digital gold because there was a fixed and finite supply of buyers, and they were basically just voting a vote of no confidence in the inflationary aspects of the monetary system. And then what you saw was people investing in the speculative potential of Bitcoin. But now that it's becoming more and more mainstream, I think more and more people can look and say, well, if they're just going to keep printing more money and they're just going to keep sort of devaluing the purchasing power of my money, maybe I'm going to move some into a commodity that holds value and is non-inflationary. So I think we're moving back to the original intent, and it's just a phase shift of Bitcoin behaving like it was originally intended. I think it's going back that way.
Frank, I think it's fair to say there are people listening and watching right now who are not sold that crypto is even a good thing, not just for the United States, but also for their own portfolio. Sell it to them.
Well, first of all, let me say, not all crypto is great crypto. There's a lot of junk projects out there. There's a lot of nonsense floating around. Yeah, and but it's one of those things where you shouldn't throw the baby out with the bathwater. If you look like the original Web 1.0 revolution, where there's a bunch of companies that came about that got a lot of hype and hoopla just because they added .com to the end of a dumb idea, right? That's essentially what we're leaving behind right now with crypto, where we're going to move into the potential of the technology to remit money across, various regulations and various economies in a very cheap and efficient manner. You're going to allow people to trace things by ownership through a blockchain. That's all great technology. And now, with some clarity around how it's supposed to be used here in the United States, I think we can lead the way and show people that there are actually viable, great projects that follow the rules, and the technology itself is great technology because it allows you to be transparent about who's owned it before and who you're being transferred to. So you can shift compliance, you can make quick work out of chain of custody, and I think today is a real big step forward in getting us to where the potential of the technology is.
We're speaking with Frank Spicer. He's the CEO of Metafied. Frank, correct me if I'm wrong, but Metafied as a company has evolved in the last few years. Can you talk a little bit about that and the way that you've changed as the industry has changed?
Yeah, so we've always had an AI component to the company, and in understanding the movements of asset prices, but we started off as sort of a ratings company to help people understand which was a healthy asset, which was real, and which was, according to my last point, junk. And we wanted to do that to help people. But where we've landed now is there's a lot of movement and back and forth with these asset prices, and there's a real need to predict the movement of these prices through AI systems. We use neural networks to help predict the movement, but there's gaps that could be filled by people. And what we do is we gamify that competition, turn it into a sport of predicting, like the same way that video games have evolved to be a sport, and we help people fill the gaps in the machine predictions. And we found a real momentum right now, and we're moving to market very quickly. We'll be out in September, and people will be able to get into our games and participate in adding signal to the market and get real value for it.
It seems like that's what we see as the crypto landscape really just grows. Companies also learn to adjust. You earlier mentioned that not all crypto is good, and it's true. From where I sit, it seems like Bitcoin is still really the dominant coin when it comes to Wall Street interest. Are you seeing other coins like Ether, Solana, or XRP gaining traction as well when it comes to institutional interest?
Well, if you look at Ethereum, the Ethereum token has moved about 40% in the last month up. It's about 20% up for the week. And what that is a signal that the decentralized finance ecosystem, where all the innovation and smart contracts and stuff are happening, those are waking up, coming into the market. And so Ethereum is worth looking into if you're an investor, because it's indicating that people are developing new and innovative ways to interact with blockchains. Solana is a way to accelerate the speed and efficiency of transacting on the Ethereum network, so it's not so expensive. XRP has its own sort of purview of things. It's more institutional in the way that they're approaching things, and I think the jury's still out, so we could see where that goes. But it's a strong project, and it's worth paying attention to. But I think you're going to see applications evolve on top of the tokens themselves. Because, you know, if you go back to the early days of the internet and people invented TCP/IP, for instance, no one walks up to you and says, hey, are you using TCP/IP? They say, no, do you know Facebook? Do you know Google? Do you know Amazon? So the way that things have evolved to help people's lives be better, be it faster, cheaper, easier, that's the next phase in what this is all going to bring.
Frank Spicer, good to talk to you again. Co-founder and CEO of Metafied, joining us from Myrtle Beach, South Carolina. Taking a look at markets, just with about a little less than a half hour to go. We're seeing stocks in the red, but ever so slightly. S&P 500 down 0.1%. We drive to the close next.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We are wrapping up the week with a loss for the Dow, the S&P, and NASDAQ, all in the red. Let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Sean. That's right. U.S. stocks are trading in the red right now with the Dow down 181 points. S&Ps are down 5 and NASDAQ is lower by 14. The U.S. 10-year yield is at 4.43. Gold is in the green, oil is in the red, but Bitcoin, that's down by 1.3%. Among the main 11 S&P sectors, leaders were utilities and consumer discretionary. Energy was under pressure, and leaders to the upside in the Dow, IBM and Travelers, while 3M fell 4.4% after earnings and led to the downside. Also after earnings, Netflix fell 5%, and wrapping things up, Sarepta plunged as much as 42%. On news, the FDA will ask the company to halt its gene therapy shipments. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, thank you very much, Bill. Have a great weekend. And to hear live breaking news over your Bloomberg, type SQUAWK, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a twin.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody. It is just about 18 minutes to the close of U.S. equity market trading on this Friday, July 18th. Isabel Lee, does it feel like a Friday to you?
It feels like a Friday. This week felt long and weird, but we're almost going to make it.
We are. Well, almost. We got, 18 minutes to go until the close of trading. We got an hour and 20 minutes of the program left. I think we can do it. The S&P 500 down 0.1%, the Dow down 0.4%, the NASDAQ down fractionally.
And we got a slew of earnings this week, really lots to digest. And with us is Jared Cassidy. He's the head of U.S. Bank Equity Strategy and Large Cap Bank Analyst at RBC Capital Markets. He joins us from Portland, Maine. So thank you for joining us, Gerard. So first of all, trading revenues held up strongly in the second quarter, especially in equities. How much of this do you think is structural drivers versus cyclical volatility?
Sure. Thank you, Isabel. I would say that trading revenues are always going to be impacted by market conditions. And when there's increased volatility, like we saw especially in April, trading revenues benefit from that. And so even though the big broker-dealers, the big investment banks, Goldman Sachs, JP Morgan, Morgan Stanley, et cetera, are certainly benefiting from the trading environment, it's more, I would say, cyclical than structural. But again, volatility benefits the trading areas for these banks. And when you compare trading revenues to investment banking revenues, they're much, much larger. Now, investment banking revenues, on the other hand, want stable and calm markets, and that helps those revenues, which really impacted them negatively in April and May.
With Goldman and JP Morgan outperforming in capital markets, what do you think they're doing differently that's allowing them to really gain market share across equity trading, advisory, and many more?
It's a combination of factors of, hiring the right people, having the deeper relationships. But it's also both these companies, and Goldman in particular has pointed this out, is that they have a very laser-like strategic focus to be the top investment bank, or I should say the top broker-dealer to their top 150 clients. So Goldman has identified these clients and has steadily improved the penetration in the wallets of those clients. And it's been a focus point. JP Morgan has been doing that as well. And so I think that's part of the reason that you see their market shares improving in this area is because of this increased focus, plus having the proper or the right talent in the chairs that do the customer facing has been a factor as well.
As these results have had a few days to breathe, and you've looked at the commentary again and again, and you've heard interviews with different executives, how would you characterize the way they've spoken about the economy? And the reason I ask is because we love looking at the banks because they've got a great view on how U.S. customers are doing?
Tim, it's a really good question. In fact, I was asking that question on the earnings calls because, to your point, think about what we just came through. You know, the president announces his tariff policies in April of this year. The market goes into a tailspin. The economists, many of them, raised the probability of recession meaningfully for 2025. But the bank's results in the second quarter were very, very good. The first quarter of this year, according to the FDIC, the industry had on an annualized basis record profitability. And since the second quarter results were in general so far better than the first quarter, that record profitability is likely to be maintained. So what gives? I mean, you have all this uncertainty. We see the headlines, but what the driver, I think, is the employment picture remains very healthy. Not only do we have a low unemployment rate, we're still producing anywhere from 130 to 160,000 new jobs every month. And when you look at the JOLTS numbers, the job opening and labor turnover numbers, we still have a shortage of workers. And so as a result, wage growth remains very buoyant and the consumer is in good shape. Now, corporates and commercial customers, they see a little more relief, I would say, versus what they saw in April when the banks reported first quarter results and the Trump tariff news just hit. So it's still cloudy, but it's not as dark as it was in April. So there's a little bit of better confidence now. We'll see if that holds through the end of the year. But it's really kind of interesting because, you know, in April, nobody was expecting the results like we're seeing today with the banks suggesting the economy is much healthier than people were thinking it was going to be.
Given the year-over-year rebound in capital market revenues, are we at an inflection point when it comes to broader financials exposure, or do you think headwinds like tariffs or elections still warrant some caution?
It's interesting because, you know, trading revenues for some of the banks were at record levels. And so you could argue that, you know, we have to continue to see maybe record levels for this to continue for the industry. And those are always hard to predict. So I wouldn't say you necessarily have to get bearish on the investment banks or the trading businesses. Plus, you know, we still haven't seen the investment banking results come back to, you know, above trend lines when you look at both ECM, DCM, and advisory. Goldman pointed out that the advisory revenues now are above the 5-year trend lines, but ECM, led by IPOs, initial public offerings, they really have not fully recovered yet. And when that happens, that leads to more equity trading, of course, in the as more IPOs come out. So there's always risks. We don't disagree with that. There's always concerns out there. So I would say that there's still real opportunities to own banks and investment banks to make money in this market relative to the market. The financials in general are inexpensive. And, you know, should the market go into a correction for the higher PE, higher value stocks, the banks should hold up, you know, pretty well relative to the market.
Just 20 seconds left, very briefly. Do the big banks have anything to be concerned about when it comes to fintech firms and crypto legislation?
No, the banks are going to embrace it. The banks are going to be part of it. Nothing to, you know, we don't believe any major disruptions coming from fintechs. The banks are going to be in there fighting it out, and I think they're going to do a very good job in competing.
Gerard Cassidy, head of U.S. Bank Equity Strategy and large cap bank analyst at RBC Capital Markets, joining us from beautiful Portland, Maine on this Friday afternoon. We are just a few minutes away from the close of equity trading. S&P 500 still down less than 0.1%. The NASDAQ composite pretty much flat. The Dow down 0.4%. I'm Tim Stenevec, along with Bloomberg News cross-asset reporter Isabel Lee. She is in for Carol Masser on this Friday afternoon. When we come back, we're going to be joined by our Bloomberg TV team for our cross-platform coverage. We're going to count you down to the close next.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. I'm Tim Stenovec. That is Isabel Lee. She's from the Bloomberg News Cross Asset team. She is graciously hanging out with us this afternoon for Carol Masser on this Friday. Second time this week that you've been with us. Thank you for joining us. Are you having fun?
I'm having so much fun.
Okay.
And honestly, it's been a crazy week. Wednesday was crazy for us. Today is also crazy.
Oh my
Every day
gosh.
must be crazy for you.
No, not every day, but when it's like big weeks of earnings, like we have
That's
this
true.
week and like we have next week. We got Tesla next week. We've got Alphabet next week. We'll talk about earnings coming up in just a few minutes. We're going to have some fun, though, because you pointed out this story to me. You sold me on it. It's about a Taylor Swift bump for a certain startup. What's going on?
So there's this startup, Phazit. Their revenue is on track to exceed $40 million this year because of a viral moment that really accelerated their rollout in Target stores. So what is it? It's glitter freckles. So I don't know how much you know about current trends, Tim, not to expose your age, but the younger folks now, they do makeup, like freckle makeup.
I did not know
They think
this.
it's cute, but
Okay.
then they do it as natural as possible.
So we're talking
brown
Gen Z here?
Yes.
Okay.
I grew up thinking that freckles are, it's different. Freckle reputation now is good. So they would put brown makeup and stuff, but then for this startup, it's glitter freckles. And if you can't imagine it, just imagine glitter droplets on your face, and that's exactly how it is. And the story that we had says that within 48 hours, sales of makeup freckles sold on their website exploded to more than $1 million. And that's a 3,500% spike. That's almost like a meme stock.
So the folks who started this are 29 years old. They went into 2024 hoping to sell $3 million worth of products. But thanks in large part to the luck from Taylor Swift, they topped out at $10 million.
And
Wow.
yes. So again, TikTok influencers have really been obsessed with fake freckles. They use everything from eyebrow pencils to liquid eyeliner. Some have used ball pen to make freckle spots. It depends on your skin tone too. You know, some freckles are brown, some are black. But yeah, now there's glitter freckles. And it really just shows how you just have to wait maybe for that one viral moment if you're lucky enough. And that will really change the trajectory of your startup.
This company, Phazit, it seems like this was launched around Coachella last year.
Yes.
Popular for concerts, festivals, sporting events. Since October, more than a dozen NFL teams have contacted the startup about potential collaborations. NFL teams?
And over the past year, the partners say they've had roughly 25 meetings with PE firms who want to invest. I can only imagine that's like tenfold now, probably.
Doesn't this seem like something you can replicate, though? Like I'm sure there are all these imitators out there now.
That's true. I think first mover is important, but you're right. There's still a lot of imitators, but I don't know. I mean, if Taylor Swift advertised this product, nothing can beat that.
And she wasn't even trying to
That's
advertise
true.
it. It's Taylor Swift, so if she, does something, everybody pays attention.
I would not do this personally, but I'm a more conservative person. But it would be fun to see someone do it. Honestly.
So you're not.
Can you imagine?
What's the next TikTok trend that I don't know about because I'm an old?
So I'm semi-old in that I watch TikTok on Instagram.
Yeah, you and me both.
When you cross-pollinate or cross-post, that's when I watch it. So not really up to speed about the latest TikTok. A boring TikTok trends I realized there's a lot of issuers of ETFs are now using TikTok.
It always comes back to ETFs when you're talking to someone on the cross-asset team. Respect. I got respect for that.
But because they see a bump, they see interest, and this goes to show that even for us in media, you go where the audience is. And maybe you go to TikTok, maybe you go to Instagram, but you have to meet.
Well,
where
your colleagues on the cross-asset team, Vildana and Emily Graffeo, Vildana Hyrick and Emily Graffeo, they wrote about Matthew Tuttle recently
Yes.
using
That was a fantastic big tip.
Discord as a place to find ideas.
That's where he's getting ideas
Yeah.
because that's where his audience is.
All right, check out this story and, of course, that big take from
Emily Graffeo.
Emily Graffeo and Vildana Hyrick on the Bloomberg Terminal and at Bloomberg.com. Coming up next, we'll be joined by our Bloomberg TV team for our cross-platform coverage. The closing bell starts now.
of the U.S. market close starts right now.
We're about 2 minutes away from the end of the trading day. Scarlett Fu and Bonnie Quinn here with you, and here to help take you through the closing bell, we've got a global simulcast. Tim Stanovic joins us, as well as Isabel Lee. We bring together our Bloomberg television, radio, and YouTube audiences worldwide as we parse through the most crucial moments of the trading day. And Tim, it doesn't look like a whole lot is going on when you look at the closing numbers here in the S&P 500, little changed, but it's been a walloper of a week in terms of some of the dynamics within.
Yeah, I think that's the exact right way to put it. The big banks reported, and certainly this week was a big one when it came to conversations and chatter around the future of Fed Chair Jay Powell and a lot of Fed speak ahead of that July 30th meeting. But if you thought this was a big week for earnings, check out what we got next week. Verizon, T-Mobile, AT&T, NXP, Lockheed Martin, Philip Morris, Coca-Cola. Are we going to hear about Sugar Coke? Maybe? Tesla next week as well. We'll get Southwest. We'll also get
That's just
Blackstone.
a sampler.
That's just a few. That's just a few.
But it's interesting because even with all the political grandstandings and even the recession warnings, the U.S. economy just really refuses to buckle, even with President Donald Trump berating Fed Chair Jerome Powell and newer central bankers really just debating the course of interest rates. We're still in a good shape, especially when it comes to the equity market.
It is pretty stunning, isn't it, Isabel? We just had Christina Hooper saying this is the calm before the storm, and it certainly feels like there could be more, at least squalls coming, let's put it that way, because we do have those tariffs. Just 1.5, I think, more weeks, 2 more weeks until the August 1st deadline. So, you know, we're bound to see more of those letters go out and more comments from the president. He couldn't even help himself. He was commenting on it earlier today during the signing of the Genius Act.
But that just goes to show that it can all be rolled out another week as well, because he's constantly moving goalposts, and the deadlines are, well, they've proven to be somewhat flexible, at least from his perspective. Let's take a look at how things are shaping up here as the closing bells rang here on the floor of the New York Stock Exchange and over at the NASDAQ. You have the S&P 500 finishing basically unchanged at 62.96, so just below that 6,300 level, so very much holding near its record highs. The Dow Jones Industrial Average losing 1/3 of 1%, lower by 142 points, 44,341. The NASDAQ finishing marginally higher. And we take a look at the Russell 2000, the small caps. They are the laggards of the session, losing ground by 0.6% here on the day. Of course, when you look at how things fared for the week, we are looking at, let me just pull this up, gains all around here for the S&P 500. You have gains of about 4.9% for the Dow Industrials and 9.1% for the S&P 500.
You know, it just switched, but we were 250 in terms of gainers and decliners in the S&P 500. That's not how things settled, but pretty close to that. 255 stocks, excuse me, moved higher. Isabel, 244 moved lower.
If we look at the IMAP, this also tells the story because, Scarlett, you mentioned it earlier, but utilities were the best performer. We're talking mainly, though, Vistra Energy, for example, these utilities that are involved in power consumption by AI companies and so on, up 1.7%. But energy companies in general down 1%. So there was a lot of stories going on underneath. It wasn't just crypto week.
And just a quick correction, when I gave those numbers, I'm sorry, I was referring to volume, not the actual index levels, because the index levels are not moving like that on a weekly basis. The S&P 500 marginally higher by 0.6%. The NASDAQ, little changed on the week.
All right, well, let's talk to some of the stocks that were on the move today and this week as well. A few of the gainers on my radar included Charles Schwab, up 2.9%. The company did report second quarter earnings earlier today. It topped estimates. Client assets hit a new record. Trading revenue increased. Rick Wurster, the company's new-ish CEO, he said they are continuing to build out digital assets, and it'll include spot trading in Bitcoin and Ethereum. The company expects that to be a, quote, meaningful growth driver. Also, watching shares of what's happening with crypto companies today because of that signing of the Genius Act in Washington. We heard comments from President Trump earlier today talking about that bill moving through Congress and ultimately ending up on his desk. Shares of Robinhood higher by 4% today. The president hailed that new law as a giant step to cement American dominance of global finance and crypto technology. It delivered a major victory for the digital asset industry. Robinhood CEO Vlad Tenev was actually at the event at the White House today. The president called him out by name just a little bit ago. And finally, here's an interesting one. California Resources. It's an energy and carbon management company based in California. It popped in late trading. You can see it on the chart right there, up close to 7% on the day. This after news reports that Governor Gavin Newsom of California is proposing a bill to streamline permitting for new oil wells. Environmental groups, though, are pushing back. They say it would wipe out scrutiny of the industry. California Resources up today by 6.7%.
On to the decliners, we have to start with Humana because shares closed just 1.5% lower, but intraday it was wild because the shares sank as much as 7.5%. That's the lowest since at least April 2017. So Humana lost its lawsuit seeking to reverse cuts to its Medicare bonus payments. So this is a blow for the insurer because they really hoped that the court would restore billions in revenue. So we're definitely going to see a squeeze in profits. We have Barclays telling Bloomberg in April that a win would have doubled their 2026 profits. So this is why stocks are edging down for now. Next is Lucid. So this is also in the red, down by 2.5%. Shares are just really consolidating after the massive jump we saw on Thursday, that's yesterday, which we saw the most in 2 years. So this came after the company said it was planning to team up with Uber and self-driving tech startup Nuro to launch a robo-taxi fleet. And last we have Chevron. Shares are down by almost 1%. So Chevron won the arbitration battle with Exxon, which is its larger rival, to finally close its acquisition of Hess. So the victory comes after more than 20 months after the deal was announced, which was worth $53 billion. So really at least a lot of overhang there lifted in the industry.
Yeah, overhang lifted, but it was something that investors were anticipating, which might explain why the shares ended up finishing lower. Let's take a look at what's happening across fixed income. The Treasury yield down across the curve, but certainly more so at the shorter end of the curve. The 2-year now down about 3 basis points to 3.86%. The 30-year finishing the week below 5%, but remember, it did reach about 5.07% on the day that President Trump, there were reports that President Trump was considering firing Jay Powell, really threatening the independence of the Federal Reserve.
Well, this story in the Wall Street Journal got our attention this afternoon, maybe because because I'm always hungry. But if you've been to a McDonald's recently and you've ordered maybe, I don't know, some sort of chicken sandwich, a McChicken sandwich, and it hasn't come with lettuce, there's actually a reason why. It's because the snack wraps that they brought back have been such a hit that some McDonald's are actually running out of lettuce.
This is shocking because I can't ever imagine eating a burger without lettuce, tomato, bread. Even maybe I can live without the bread, but definitely not.
I thought you were going to say sesame seed buns. Isn't that part of the whole?
Pickle also
that's
will
the
be a
jingle,
good-
right?
Part of
Terribly
the
sad. It might be literally the only good thing in that whole snack. I mean, good as a nutritious.
I know what you
don't at
meant.
me,
It was still funny.
It just goes to show how big a player McDonald's is in anything, right? When demand for any of its goods changes, like it absorbs so much of the supply chain that things can run out. It on its own, if it launches a new product, there's a run on everything that goes into that particular sandwich.
And that's why you have to wonder if the person who decided that this should make a comeback and thought it was going to be a success, and then enacted it, then why didn't they have enough lettuce? Why do they have
You got to call Tim Cook in situations like that. That's his specialty. He's the supply chain guy.
So we're saying that McDonald's needs a new supply chain specialist?
I didn't say it, but
lettuce specialist.
Didn't they have an issue with eggs too when they brought back
They did.
breakfast?
They did, but they defended themselves. They said that the outage was brief and now resolved. So there is that.
Okay, people need their protein in the morning. All right, let's talk about another story, which is we know that private schools are a big deal here, certainly in the tri-state area. Have you heard of Harrow, which is a boarding school famed in the UK?
I had not heard of it before this story.
Okay, I mean, it's like the second most famous British boarding school after Eton, but it now will be opening a New York-based offshoot. Vani, I know you've heard of Harrow.
I've heard of Harrow, yeah, tangentially since it's British, but yeah, this particular one is going to be run by the Amity Education Group, which is an Indian family foundation.
So it's licensed.
Exactly, it's fascinating. Also, I mean, I don't know about the visa situation and when they're going to be able to get that all sorted out, because not immediately, apparently. But if you were a Harry Potter fan and you wanted to go to the school that served as a stand-in for the Harry Potter movie, then you would want to go here, because this particular school actually served as that stand-in.
Yeah, well, the one in New York won't be the stand-in for the Harry Potter school, but they're going to be opening one in New York, and it's not in the city of New York, and it's not in Long Island, and it's not in the Hamptons, which is where a lot of New York's moneyed elite summer and have their second homes, but it's going to be somewhere in between. So it's kind of a school for people who kind of make their way between their Manhattan homes and their Hampton homes.
And $75,000 is the price tag for tuition, right?
Including boarding, though, Tim.
So, which actually seems, if you're in the world of New York City private schools, kind of the cost of a day school here in New York City.
You're saying it's reasonable?
Yeah, which is a different conversation, the cost of education. But all right, grab your Quidditch brooms and head on over to the new school, Harrow International School in New York. That is going to do it for our cross-platform coverage of the market close. You guys have a great weekend, because we will see you back here, same time, same place on Monday.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. I'm Tim Stenivek. That is Isabel Lee. She's in for Carol Masser on this Friday afternoon. She's Bloomberg News cross-asset reporter. And among the many great things that makes it great when you join us is you also know a lot of the guests that we speak to, because you end up speaking to them for some of your stories.
Yes, and I only bring the best of the best. And I
Yes,
feel like
that's what I
today
like
we
to
have
hear.
the perfect guest, because it's really been a crazy week. We had Jerome Powell almost getting fired from his job, or maybe just in jeopardy. We had a lot of earnings, stocks fluctuating. We had data showing consumer expectations is improving. We also had a lot of inflation data. And let's not forget, crypto hit $4 billion in market cap. So to help us make sense of all of that is Rafael Tuin. He is the head of capital market strategies at TKO Capital. That's an asset manager with over 50 billion euros in assets. And I bug Rafael a lot, maybe once a week. So I'm really excited to introduce him to you. So maybe we could start with that. What do you make sense of the week? Why does the economy refuse to buckle even with all these headwinds? Do you think that euphoria has gotten too far?
Yeah, euphoria is clearly a word you can think of when you think of what's happening in the market. Cyclical, the stocks performing well versus defensive, Bitcoin being all-time high, meme stocks, you see that in the credit, high yield market as well, lots of deals coming in. So, investors are feeling good, and so far the economy is going their way. When you look at the latest data, retail sales have been fairly resilient, manufacturing, industrial productions were also pretty good the past few days. Labor has shown some resilience as well. So a lot of those initial thoughts about, a massive slowdown on the back of high uncertainty, tariffs, the Trump administration, the rising deficits are not materializing just yet.
Well, you said just yet.
I do say just yet.
Why?
Indeed. Well, most likely we feel like those tariffs will have ended up having an impact on the economy. Maybe we can say that taco is kind of dead.
Really? You think so? You think
Feels like.
Do you think it's dead because come August 1st, those tariffs that were threatened last week via letters will go into effect and there will be no changes?
It looks like, first of all, the market was assuming kind of a base rate of like 10% for most countries and potentially a bit more for China, up to 30%. Feels like this base 10% rate is probably higher now. We are getting closer to maybe 20%. This is the latest data from Europe, apparently. So this is going to be obviously an additional impact on the economy, on inflation. And also it feels like, obviously, President Trump has had a few wins more recently. The big, beautiful bill, geopolitics, and so on. And potentially, we know this is the core of his program. He's very serious about implementing those tariffs. So when you put all of that together, you feel like maybe there is not such a taco trade anymore. Maybe we should buckle up for real tariff impact on inflation, on the economy. We're starting to see a little bit of that. When you look at the inflation data, we've seen indeed, especially in some categories, the impact of tariff being felt. It has been offset by non-impacted sectors such as services and housing, but you're starting to see some of that. You're starting to hear that also in the conversation. There is some stagflationary impulse going through the economy. But for now, it's true, the resilience has been very impressive.
Where do you stand on the rate cut debate? We have Fed Governor Christopher Waller hinting that he would dissent if his colleagues vote to hold interest rates steady in July.
Well, when you think of Jerome Powell, you probably feel like he's having a very difficult hand now. I was saying the word stagflationary. This is the worst case scenario for a central banker, is going to have to deal with potentially a slowdown in the economy. Yes, it's resilient, but it is somewhat slowing down on the one hand. And at the same time, obviously, inflationary pressure that should build in H2. And this combination will probably have to push the Fed to stay on the side, wait for more data, but obviously at the same time, a lot of political pressure to act. Every day a new headline from internally or externally from President Trump. So how do you reconcile the fact that the economy is holding up well and inflation is creeping back in with this massive political pressure for cutting rates? Is going to be an interesting show to watch.
We're speaking with Raphael Tuin, head of capital market strategies at TKO Capital. He joins us here in the Bloomberg Interactive Broker Studio. About $59 billion in assets under management. Those assets, where are they allocated right now?
So we do private credit, we do private equity, real assets, liquid markets. So it's really a 360 approach to investing in many ways. Historically, we're a European company founded in Paris, but increasingly we're international companies, especially in North America. That's a major focus.
Are you starting to see cracks form in private equity? You see a lot of the institutional, well, I would say institutions here in the U.S., a handful of them in recent months that have traditionally had large exposure to private equity start to sell some of that private equity. I'm talking about some of the universities that have done that of late.
You're seeing somewhat of a slowdown, it's true. Some investors are more on the wait-and-see mode, waiting to see some cash back to redeploy. But at the end of the day, it's still a very positive long-term trend for that kind of strategies. Clients are still willing to allocate more and more. You have also the retailization of the asset class, more and more retail people coming in. And we saw President Trump announcing some measures on that front also for retirement plans. And so at the end of the day, this is a mega trend. Maybe you will have some setback along the way, but still a fast-growing market.
You've also increased your exposure to U.S. tech. What macro signals or valuation metrics are giving you conviction to do that? Because some people are saying it's too frothy now.
Well, it's an interesting setup for tech. When you think back early this year, people were expecting a couple of negative factors to impact the asset class and to impact the sector. People are talking about DeepSeek, impact of DeepSeek. What about the return on investment on all these CapEx? Could we see a shift in the amount of CapEx here? That was actually not the case when you listen to those companies, and we're actually seeing an acceleration of that trend. Same with tariffs, people were expected those big tech to be impacted. So in many ways, this did not materialize, and at the same time, the valuations you're paying are expensive. You're paying a premium for US tech, but not necessarily very expensive for all of them. You do still have pockets of values, so you have to be selective. You know, the Max 7 concept is probably kind of too blurry and too messy to be considered. But within that bucket, you do have some pockets of interest.
And there's also growing debate about the end of U.S. exceptionalism. You mentioned earlier that your focus is more North America. What evidence do you see for or against rebalancing towards Europe or other emerging markets? Or are you still really go U.S.?
No, we do see a lot of rebalancing. So we're not saying this is the end of U.S. exceptionalism. You have many reasons to believe that, yes, indeed, there is away from the US, a deficit of growth, of productivity, of innovation, and this is not going to go away. But when you look back over the past 5 years, for every dollar invested in the world, 80 cents were invested in the US. So
that worked out for that period of time, but do you think it's going to work out like that in the future?
That's a key question here. Like, is it sustainable? When you look at the global share of GDP coming from the US, it's 28%. So this is a massive imbalance. And the result of that has been twofold. First of all, US assets have outperformed massively. Second of all, they are now extremely expensive. And everywhere you look, this is the case. The gap, for instance, in equities between the US and Europe is the largest ever. In credit, you do see US credit spreads now trading tighter than European spreads, something you've rarely seen in history. We can speak about the dollar. The dollar was clearly very inflated, and you're seeing some impact there as well. So, you know, not saying that US exceptionalism is dead, but the rebalancing of flows is probably something that could have legs.
Raphael, we'll have to talk about the dollar next time. We are unfortunately out of time. Raphael Tuin, head of capital market strategies at TKO Capital. It's an asset manager with over 50.6 billion in euros under management. That's about $59 billion. Coming up next on Bloomberg Business Week Daily, it is one of the most read stories on the Bloomberg terminal. It's about Jane Street. That's next.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Little change for the U.S. equity market. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Dow Jones Industrial Average ended the day with a loss of 142 points, down by about 0.3%. S&P 500 index little changed on the day, down half a point, close to a record 62.96. NASDAQ up 10 at 20,895 for the NASDAQ Composite Index. That was an advance today of just under 0.1%. 10-year 4.41% with a 2-year currently yielding 3.86%. Spot gold of $11 the ounce, up by 0.3%. And West Texas Intermediate crude down 0.2%, 67.41 a barrel. Crypto week is behind us. Bitcoin right now, 117,240. Bitcoin today down by 1.9%. Netflix shares tumbled after earnings. Netflix lower today by 5.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Today's most read story, Tim, we get an inside look into one of the most secretive trading firms. It's filled with juicy anecdotes and fantastic quotes. It's Jane Street's secrets spill into the open and face rival scrutiny. It's by Catherine Doherty and Bernard Goyder, and there are really a lot of fantastic information. I really read it from start to finish, and sometimes I just scroll through things. And I love this detail. It says Jane Street's market making and other trading operations are now so expansive that competitors are a who's who of the industry, namely Citadel, Susquehanna, Virtu, as well as banks and broker-dealers. And you have great quotes from Larry Tabb saying they came from virtually nowhere 7 to 8 years ago to one of the top 3 or 4 retail market makers. Larry Tabb is from Bloomberg Intelligence. So we now have Kat to join us. So tell us more about this. How hard was it to unveil a lot of these details given how secretive they are?
Well, to give you an anecdote of if you were to go on LinkedIn and find a Jane Street employee, most of them do not have profile photos. And I would also say that the majority don't even have a title. They might say that they work at the firm, but you can't really identify who they are or what they do there. Some do, I would say the more senior folks. But in general, this is a firm that operates behind the scenes. They are under the radar. They're just focused on the work of being a middleman in the markets, and they're a crucial part of how U.S. trading and globally in other markets. They perform a important task of just making sure that that trading is actually happening. They're executing the trades, but they don't have to be front and center and talk about how they're doing it. So reporting about this firm is quite tricky, given that they don't really need to say much about what they do. Their work speaks for itself.
So what made Jane Street so successful? You also wrote in your story, you quoted Ben Eifert of QVR Advisors. He said that they take a lot more risk than a Citadel Securities would. Why is that?
Yes, there's a few factors. Risk is a big one. The reason that they're able to take more risk is the money that they have to support their trading operations is all theirs. That's their own capital. So unlike a bank or even a hedge fund that has capital that they're trading with, that money is either their investors or they have to answer to shareholders. If you're a bank and you have a major loss, you're going to have to disclose it, and ultimately, that's not all of your own capital that you're having to put to work. Whereas Jane Street has billions of dollars that they've built up over time, and the more money that they've generated over time, they've put that back into their operations, and they're playing with the bigwigs, and in many ways, just their numbers speak for themselves. Their trading revenue has surpassed Bank of America, Citigroup. They're now some of the biggest players on Wall Street. Their trading operations. These banks that I'm naming have other units that are far larger than what Jane Street is generating just as a trading firm. But if we're just talking about being a market-making firm in not just the U.S., but globally, Jane Street has become one of the more dominant players.
Why? I never heard of Jane Street until Sam Bankman-Fried came on the map, and this was before the old FTX blow up. Didn't hear about Jane Street for a while, and then Srinath Rajan comes into our studio. This was like maybe you were just getting married at this time, and he comes
the coup?
With this story. Jane Street boss says he was duped into funding AK-47s for a coup.
Yeah, Jane Street's been in the news for a few recent weeks, which is unusual. You bring up the other time, which was Sam Bankman-Fried is an alum from this firm. So often people were Googling the firm. I could see like an uptick during that period, and now of course you're seeing it,
it was like
on a larger
of
scale.
Sam Bankman-Fried was like he got out of college and then went and worked at Jane Street.
Yes.
And he was really successful there.
Yes, and I think that. Let's use Sam as an example because he speaks to this larger culture that Jane Street represents, which is mathematical. They have quants. They develop their own puzzles. Someone pointed out to me today, and I wish I knew this before my story was published, that they're even like developing, they're hiring someone to develop their own puzzles and games within this company. So that's kind of how they think. They're quantitative, they're problem solvers. And Sam was like that, and he represents kind of what others that you might find currently at this firm are doing. They're problem solving for the global financial system in many ways. They're trying to be smarter and faster and better than their rivals by developing their coding, and they're developing algorithms to essentially create like the technology that makes them as successful as they are today.
Okay, we got to get to the coup.
The coup.
Yes.
I mean, that's just a separate side note that one of their founders had found
You
himself.
You include this in your
He
story.
did. Yes,
yeah.
yes, yes. Well, because these are the moments that you're bringing up that has pushed this firm into a more public-facing, into the spotlight per se, and that's unusual for a company that is notorious for being, again, behind the scenes, for not speaking out. It's noteworthy that many of their competitors, the ones that they even name to their own investors, they do have credit investors that they answer to. So they identify, hey, these are our competition that we view. And to the competitors who might put out comment letters or give their views on the marketplace, Jane is not one to put forth their opinions as loudly as some of these other firms that they're naming as their competitors. So these are the few kind of differentiators that in many ways make them, well, they're very unique as a market-making firm, and they're not like some of the biggest banks as well that they're competing with.
Yeah. As a reporter, when I read a fantastic story, other than learning from it, I always wonder, oh my gosh, how did the reporter do that? So can you share with us an unexpected moment or like a hiccup you didn't expect that happened through the course of your reporting? Because clearly it really took months and it's really well reported.
Well, not to reveal all of my secrets, and I will say that my reporting never finishes, so I try not to give too much away. So that I view this story as just, there's going to be many, many more. But I will say that what I love about reporting in this industry, and it's not just specific to Jane Street, but any market-making firm or an exchange, but in the world of the financial markets, when you speak to people who are so in the weeds and so mathematical, or they're trying to explain a dynamic that is changing in the marketplace, and Jane is at the heart of it because they're such a big player, my reporting leads me down rabbit holes that I can't even fit into some of my stories sometimes, but that I think is the biggest surprise to me, and has been a surprise to me about Jane's. It is just the size of, you mentioned risk taking, but it's the wallet that they have to do that that I think was shocking, not just to me, but to people I talk to in the marketplace. Their own competitors have been sifting through these documents that have come out, and everyone was asking the question, how do they make the type of money that they do at the scale that they do? And we're starting to see some flavors of that.
And because we've seen that, this is why they caught the attention of the regulators in India and said, oh my gosh, let us look into it. And so they did, and now the secret is out in the open. In general, how do courts or regulators view those tactics? Because it had something to do with options. So they said they see it as arbitrage, but some may see it as manipulation. I don't know. What have you heard in your reporting?
So the situation that you're referencing is over the July 4th weekend, the regulators in India had come out with a 105-page order against Jane Street, alleging that they were manipulating the market. That is an ongoing situation. That is something that the firm is going to respond to in a more formal way. But they've already come out and said that they do not agree with this decision, that they will fight it. But all things aside, it is very specific to the Indian options market, where they have grown quite large. So that is the reason. And again, it speaks to this larger story about the firm itself and its prominence. They have taken such a role in the Indian marketplace, and they're based in New York City, but they have offices globally. So that one instance that you're mentioning of the regulators looking into Jane Street within their own marketplace in India, the people that I talked to, I was trying to understand, well, what does this mean on a global scale? Because you have to just zoom out and think about what does this mean for the firm and what does it mean for the competitors? And the answer that I kind of came to, the conclusion that really is the story that I put out today, is this opens the door for further questions, further inquiries. There's nothing to stop other regulators in other countries from just knocking on Jane Street's door and saying, hey, we are going to look into this further, or we have further questions. Not to say that anything has led to that, but there's absolutely that potential based on the folks that I talked to. They're all saying that this is potentially the beginning.
We only have a little bit of time left, but it's one of the most read stories on the Bloomberg terminal today. It was like the most read until JFK like shut down its airport for 30 minutes or whatever.
Yes, that's an important story to our readers.
Now it's the most important. Now this is the most read story, though. What has been the response? People reaching out to you? Again, not giving away any sources, but what are you hearing after publication?
A lot of surprises, which is kind of fun because the whole point of this story is like, here's the surprise that you didn't know about, and then. You know, people love to share their opinion on the situation in India that you brought up, whether a lot of comparison to some of Jane Street's competitors, like a Citadel Securities, a Susquehanna, which is where the founders came from. It just generates so much discussion, and I love the feedback like that leads to stories ahead.
Kat Doherty, Bloomberg News finance reporter, joining us here in the Bloomberg Interactive Brokers studio. Check out her story on the Bloomberg Terminal, co-written with Bernard Goiter. Jane Street's secret spill into open and face rival scrutiny. A regulatory probe and bond documents show how a $42 billion war chest and an embrace of risk drive profits. Again, among the most read stories on the Bloomberg Terminal. Coming up next, we're talking Players TV.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be an up week for the U.S. equity market with the S&P 500 index on the week up by 0.6%. Little change for the S&P in Friday's trading session as investors were sifting through earnings reports. Bond yields fell as Fed Governor Christopher Waller, right here on Bloomberg Radio, reiterated his case for a July rate cut. S&P down 0.5 point today, finishing the week, heading into the weekend, 62.96, very close to a record. The Dow down 142, drop there of 0.3%. NASDAQ pushes higher. NASDAQ up another 10 points, up by less than 0.1%. 10-year 4.41% with the 2-year 3.86%. Gold up $11 the ounce, up 0.3%. West Texas Intermediate crude down 0.3%, 67.36 a barrel on WTI. Bitcoin now down 2.1% at 116,965. Busy week for bank earnings is behind us, so what do results from banks, including J.P. Morgan Chase, Citigroup, Goldman Sachs, and Morgan Stanley, tell us about the economic backdrop? Gerard Cassidy is head of U.S. Bank Equity Strategy at RBC Capital Markets. He was a guest right here on Bloomberg Business Week Daily.
It's still cloudy, but it's not as dark as it was in April, so there's a little bit of better confidence now. We'll see if that holds through the end of the year, but it's really kind of interesting because in April, nobody was expecting the results like we're seeing today with the banks suggesting the economy is much healthier than people were thinking it was going to be.
Gerard Cassidy of RBC, J.P. Morgan Chase up 0.5%, Citigroup up 0.4%, Goldman Sachs up 0.3%, Morgan Stanley down less than 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Well, there's lots of money in sports and media, but it's a lot more fractured and fragmented than it historically has been. So instead of a handful of networks going after league media rights, you now have streamers and tech companies, as well as those media companies, going after a much more diverse lineup of sports that consumers now demand. Our next guest is trying to change the relationship that media companies and athletes have with the sports industry. Daron Guidry is the co-founder of Players TV. It calls itself the first media network and content provider owned by athletes and their fans. He joins us here in the Bloomberg Interactive Brokers studio. Welcome, welcome. How are you?
Thanks for having me.
Thanks for joining us. I know you came from Texas for this, so definitely appreciate it.
Oh, thank you for having me.
Players TV, what exactly is it?
We are the first ever athlete-owned TV network. We're on YouTube TV, sports package. We're on Fubo. We're on DirecTV channel 4106, and many other MVPDs, virtual MVPD providers. And we're distributed about 300 million households. That's a 24/7 channel.
You say it's athlete-owned. Mm-hmm. How do you do that?
Yeah, so for us, it was really important understanding the pendulum swing that took place with athletes launching their own production companies. And then our goal and our job was providing the distribution of that content where fans can connect with their favorite athletes in a much more humanized way. So for us, we wanted to make sure that we bring the athletes to tell their stories so fans can authentically connect with those stories, and then allowing athletes to become owners and investors in their network called Players TV.
How do you even define an athlete? Does it have to be a professional athlete? Because I feel like there's a distinction between athlete-owned to like audience-owned.
Yeah, we want the athletes to be owners in the company, so it must be professional athletes. It's kind of our thing, and NIL players as well.
And how do you decide which athletes and stories to feature? Like, what's the balance between name recognition and just authenticity?
Yeah, for us, it's not about the big name. It's really about the athletes that have unique stories to tell, that has an audience that they can connect with, right? So you see guys right now that are doing podcast shows that are not the biggest name, but they're popular now after basketball now. Like Matt Barnes, he wasn't the biggest name player in the NBA, but now he has one of the biggest podcast shows after the NBA because he can attract the top guests on the show. He can bring on the right talent on the show. So I think what we're doing right now is giving a way for athletes to connect in a much more humanized way that allows them to connect with fans with their type of content. So you have athletes that are doing travel shows. You have athletes that are doing reality shows. You have athletes that are doing Shark Tank shows. So we're doing that type of content beyond the game, beyond the uniform.
Your company recently announced a $10 million crowd raise. I don't know if that's familiar to a lot of people. It certainly wasn't familiar to me. What is a crowd raise?
Yeah, a crowd raise is a regulation CF.
Or a fan raise, I should say.
Yeah, we're doing a fan raise, but
what does that mean?
What that means is we're allowing the fans to be able to equity crowdfund fractional ownership in our company, as little as down of $1,000 to be able to be a part of the business. But not just being equity owners, but they're getting fan experiences and fan perks to be able to. It was really important for the athletes like Chris Paul, Kyrie, all these owners in our company to be able to allow fans to be a part of the table with us. And that was something that we wanted to do. And that was our way to democratize the traditional capital raising stack that happens in traditional fundraising. So back in 2012, the Jobs Act was passed that will allow companies to equity crowdfund their community.
So you have a $75 million valuation, yet paperwork filed with the SEC shows $0 in revenue in the year of 2024. Explain the discrepancy there and sort of like how much revenue do you make and why that document showed no dollars.
No, great question. So what's been filed with the SEC on Players TV Digital, that is our SPV where fans are now in that as a fractional share owners in that, where there's one line item on the cap table.
A special purpose vehicle.
Yes, exactly. Okay. Versus us having 10,000 individual owners, where we have one line item that's dedicated that falls on the Players TV Inc. cap table, where the company's doing all the revenue at, which is our holding company, Players TV Inc.
So how much did the company generate in 2024?
We close to $8 million. We're about doing close to $12 million this year in revenue.
How do you make money?
Advertising, revenue with advertisers and brands. Mm-hmm.
What hole are you trying to fill in the market? Can you give us a sense of why this will work and how this will work? Because I'm thinking if you share with the athletes, then that's less for the company.
Mm-hmm. Well, look, let's be honest. I would love to own 80% of this company, but that was never our hypothesis and our thesis. We knew that we were stronger together with a collective of athletes, similar to what Jay-Z did with Tidal. He brought all the artists in together to own Tidal. It was that same blueprint, no pun intended, to be able to own their distribution. But understanding that athletes want ownership now, not endorsementship. So you can't pay these guys and gals enough money now. They want to be able to be a part of building something and connect with their fans in a much more meaningful way. And we're seeing that traditional swing happen from traditional sports media to now athlete-led media now. So
I just want to point out I got the title Jay-Z and the blueprint reference. So I got it, guys. I got it. Okay, don't give me a hard time online. When it comes to sports rights, they're so expensive, and that's why you have the biggest organizations actually battling it out for these expensive rights. How do you get content? How do you make content for something where the rights are so tightly controlled and so expensive?
Yeah, so I think there's two distinct differences. They call sports media, which is you, the fan, watching the live games on TV in the uniform, and we're athlete-led media, and that's us bringing the content of athletes in a much more humanized way beyond the uniform. So we're doing podcast shows, documentaries, reality shows. Who wants to see a DeAndre Jordan do a cooking show versus a Guy Fieri, right? That's stuff that we're doing. And that's allowing brands to be able to transact and advertise with us versus we're more shoulder programming to live sports, but we're not live sports. We're focusing with the athlete.
Can you use any league-owned video?
Well, no, we would have to do licensing with the leagues and all that. So we try to focus more on the athlete storytelling of their content.
You raised $10 million from your fan raise. How do you plan to deploy that?
We're raising up to $10 million right now. So that's what we're doing right now. So we did our first fan raise back in 2023, right? And we raised $3.1 million from our 2,100 fan owners. So we're doing our second raise now.
And once you do, how do you plan what strategies do you have to accelerate your growth?
Yeah, our growth, we actually acquired our first company back in December, actually, with our fans. We acquired a sports ad tech company, hence to why the valuation has been increased now. So we are able to now take that capital to deploy into AI and to create more opportunities to scaling our technology stack as well, too.
20 seconds left. Give us some metrics, how many viewers you have.
We at Players TV and our 360 network, we do about 200 million ad impressions a month in our network across our ad technology and also our distribution network as well.
Includes social media too?
Separate from that, actually.
Okay.
Yeah.
Cool. Well, thanks for stopping by. Appreciate it.
Thank you for having me.
Duran Guidry, co-founder of Players TV. It calls itself the first media network and content provider owned by athletes and their fans. Duran joining us here in the Bloomberg Interactive Brokers studio. Taking a look at how markets closed out the day and the week. Well, Today, the S&P 500 pretty much flat, but in the red ever so slightly. The Dow down 0.3%. The NASDAQ eking out the tiniest of gains, up 10 points, just close to 0.1%.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week Daily. I'm Tim Stenivek. That's Isabel Lee. She's in for Carol Massar this afternoon. She's of our cross-asset team. It's a fantastic team.
It's the best team, and we have the best
Oh, it's the
row,
best team?
and we're by the window, and
Okay.
we have plants.
Okay.
And we chat all day and work all day. We work harder.
Well, speaking of working hard, there's going to be a lot of work next week because some of the stocks that are reporting or some of the companies that are reporting include Verizon and T-Mobile. Those are both coming out on Wednesday. We'll also hear from AT&T on Wednesday. We'll get a view into some semiconductors with NXP Semiconductors and Texas Instruments reporting on Monday. Lockheed Martin is going to come out. We'll get an idea of defense stocks with Northrop Grumman as well, RTX and L3 Harris too.
That's good because the economic calendar is going to be slim. Domestic and international business confidence will be reported, and just some market-moving indicators before the big deal, which is July 30 for FOMC.
Oh, yeah, I know.
Yeah.
That's when we hear from
Remember
Jay
that?
Powell. So we'll have a little quiet period starting soon. Tesla reports on Wednesday. We'll have Alphabet report on Wednesday as well. That's just a few of the companies that are reporting next week. Let's take a look at some stocks on the move this week. I'm Tim Stenivek with Isabel Lee. We're joined by Bloomberg News earnings reporter Red Brown. Red, what do you have on your radar for the week that was?
First on my radar is Palantir, had another great week. That ticker is PLTR. It's up 8% right about now, and it's been on a 3-week winning streak. It's kind of been on a winning streak all year. It's the best performing stock in the S&P 500. It's already doubled, and we're only in July. So it's doing pretty well, I'd say.
I can't believe this is a $362 billion market cap company.
And on a revenue of $1 billion, or less than $1 billion a quarter. So the valuation's just out of control, but apparently not, because people are still piling in, as you can see from results this week.
What about Citi? Sorry, I thought my mic was off, but it's on.
That's there. Good. Citi, yes, Citi. I wanted to bring up Citi just because of the week that we just had, with all of the bank earnings coming out. Citi, best performing for the week for the 6 big banks, the big U.S. banks, up 7%, 7.8%, excuse me, at the moment for the week. And that's really off the back of just kind of, there was lofty expectations heading into the reports, I think. People were expecting trading to do quite well, and Citi still blew it out of the water. Fixed income desk posted revenue of $4.3 billion. Analysts were expecting $3.9 billion, and again, that was an optimistic number. People were expecting them to do well. And then we also had strong results from JP Morgan. They raised their outlook for the year, so banks really still benefiting from the tariff volatility, things like that. So strong results, strong start to the earnings season for at least that sector.
A lot of news around Citi this week. It wasn't just that shares rose to the highest since 2008 on earnings and that stock buyback plan. That's pretty wild. You go back to 2008, now it's the highest since then. That was a long time ago, and we all know the history of Citi during the financial crisis. But then also, just a day later, Citigroup poached 2 senior JP Morgan bankers in a hiring push. They hired Aloke Gupte as the global co-head of ECM, and then JP Morgan's Alex Watkins as head of tech financing. So a lot of news around Citi this week.
Yeah, it feels like finance in general is just like, it's always competitive, obviously, but it does feel like things are really heating up. And it's not always that way. Banks can sometimes be a difficult stock to trade, but at the moment, it just feels like kind of all systems go across Wall Street.
We like Red Brown because he kind of brings us stocks we don't talk about each and every day. For example, Centene is one of the ones for this week in your stock movers.
It is. Centene, the ticker is CNC. It's probably been flying under a lot of people's radar. They probably would like to keep it that way because they're the worst performing stock in the S&P 500 for the year. They fell 11% this week. That follows up a 38% drop that had already suffered earlier in the month. And that is, they're not alone in kind of feeling this pain. Their entire this is a sector-wide story for them. So Elevance Health, United Health, Molina Healthcare, they're all struggling through higher healthcare costs at the moment. And this, I was reading the story before I came to the studio today, and our healthcare reporter has been all over this story, and this stat really stood out to me. This group of 4 companies have shed $300 billion since mid-April in market cap. So the sector is really, really struggling. And now investors, kind of the reason for the current sell-off is just investors are starting to really contemplate that this group might never return to the growth levels that they've been used to.
Never is sad. But Centene is a $13 billion company, and a quick look at the terminal shows a couple of brokers really cutting their price target from Truist to Oppenheimer. So you're right. It's just not been a good time for Centene.
And like other companies in the space, Centene does Medicaid and Medicare health plans, treatment compliance, nurse triage, a multi-line healthcare solutions provider. Red Brown is Bloomberg News earnings reporter. For more conversations like this, listen to our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Okay, Red, earnings. I know you're a busy guy when it comes to earnings, and but you're also working on some big stories right now. So we're gonna have you back because I know you got a big one brewing.
I look forward to it.
That's like a deep tease for Red Brown special.
I've got some stuff on the schedule here for you guys.
I like it. Red Brown is Bloomberg News earnings reporter. Follow him and the entire earnings team, as next week is a big one. We mentioned some of those companies that are reporting the telecoms next week. We got Alphabet, we got Tesla, and more. We closed out the week with the S&P 500 up 0.6%. The NASDAQ Composite was higher by 1.5%. The Dow Jones Industrial Average was pretty much flat, but fell about 0.1%. I want to have a big shout out for Isabel Lee for filling in for Carol Masser today, and also a big shout out to our entire team here at Bloomberg Business Week, who makes this work each and every day. Too many people to name. That is going to do it for Bloomberg